Good morning, good afternoon, and good evening, wherever you are in this wonderful world of ours. Welcome to TopstepTV opening call. I'm Eddie Horn, and congratulations. You're at the right place at the right time. We've got a lot going on here. We've got a whole week ahead of us and a lot of informative, exciting, and educational programming just for you. Today and throughout the week, we're going to be your trading buddy, your trading mentor, your newscaster, your fellow trader, and even sometimes that friend who pats you on the back and says, don't worry, your team sucks. But anyway, get ready for yourself and some top-notch, up-to-date market knowledge with our good friend John, a.k.a. the legend, the Hoagland. Good morning, Jonathan.
Good morning, Eddie, and good morning, everybody, to our Topstep team here, Topstep's Futures family. It's good to see you, Eddie. I hope you had a nice weekend.
Weekend was, yes, it was very nice weather out, and spent some time outside with the squirrels and the raccoons and the coyotes. And how about you, John? How was your weekend?
A lot the same. Just had a couple of campfires at night. Just did a lot of chilling out. Did a couple things outside. And ready for the week. We certainly have an interesting one piling up here, don't we?
Of course we do. Of course we do. Hey, real quick, you do any s'mores like when you got that fire going? Weenies or anything?
Once in a while, if somebody wants some s'mores, we'll do some s'mores. But what I really like are the pie irons. You take white bread and some pie filling, and you just stick them in the fire, and they cook up these nice little pies for you. Those are also good.
All right, after the show, give me your address, and I'll bring the wood, and you bring the pie.
Yeah.
Okay. All right. Off to news, ladies and gentlemen. Well, U.S. stock futures edged lower today as investors like you and me are keeping an eye on signs of the prolonged evaluation of those things we call interest rates. So we're keeping an eye on that, that's for sure. The Dow down 0.2%. The S&P down 0.2%. And the NASDAQ down 0.2%. So we'll keep an eye on that also. Hey, did you hear about Amazon investing $4 billion? Yes, that's $4 billion dollars in artificial intelligence group Anthropic. I think that's how you say it. So check that out. The tech giant looks to bolster its position in the corporate arms race over IA technology. Check that stock out. Well, actually, they got to it, so it's probably way too high for you and me. But anyway, John, what do you got?
Well, as far as economic numbers this morning and throughout this week, at 7:30 we had the Chicago Fed National Activity Index. 9 o'clock, of course, these are Central Time. Dallas Fed Manufacturing Survey. A couple of minor releases coming out today. Not expected to be too impactful. We do have, from what I see, one talking Fed on the schedule. Kashkari, which is a great name for a talking Fed, is due to speak at 5 p.m. Central today, so not during regular market orders for today anyways. As far as this week is concerned, there's a lot of home information, GDP, and the PCE numbers. Tomorrow, we've got Case-Shiller Home Price Index, FHFA Home House Price Index. We also have consumer confidence and new home sales. Those will be the big ones, those last two for tomorrow. We've got durable goods orders on Wednesday, as well as the EIA Petroleum Status Report. And then on Thursday, we've got the GDP number. Now, this is the third consensus on the second quarter GDP. It is expected to be a little bit higher than the last consensus, and that may not be good news as far as rates are concerned. We also have, as usual, on Thursday, jobless claims, and then pending home sales and EIA natural gas. That's all on Thursday. And then Friday, of course, international trade in goods and the PCE numbers, very important number. We know all the talking Feds are going to be watching that. And then Chicago PMI, consumer sentiment, Michigan consumer sentiment after that. And that's it as far as known major economic numbers this week. A lot of folks are also focusing on the debt ceiling that we could close down the government on Sunday if we don't have some sort of an agreement as far as running the government and the budget moving forward. So a lot of kind of uncertainties in the market stacking up, rates higher for longer, potential shutdown, budget negotiations continue to simmer, and don't forget about the auto workers strike also going on.
Yes, that's they come to some agreement there, but will the government shut down? We'll find out. Oil prices moving higher today, rebounding after the first negative week as traders return their focus back to this wonderful product. And as you mentioned, the union representing Hollywood writers, as well as major studios, announced yesterday that they're going to hash out a tentative deal ending the month-long strike. So let's pay everybody. Also, football fans out there, lots of football fans. No, Super Bowl halftime show announced. It's going to be Usher. Usher's going to do probably a very nice halftime show. I'm looking forward to that. And of course, yes, the Bears suck, the Broncos suck, the Vikings suck, and the Panthers suck. And don't forget, ladies and gentlemen, get that checklist ready to go. Okay, game plan. You got your game plan. Game gear ready to go, so have it.
Booster.
Ready?
Retro.
Ready?
Vital.
We go fly.
Guidance.
Guidance go.
Okay, we're ready to go. And let's head over to our charts. Johnny, what do you got? It sounds like a game show host. Johnny, what do you got for us today?
Well, that Bears Chiefs game, we could have had Taylor Swift do the halftime show there.
You know what? She was asked to do it. But she's got prior engagement.
She's too big.
She's too big.
Right.
Actually, she had something booked prior, so she had a pass.
But
Usher's gonna good job with Usher.
Yeah.
I was hoping maybe Led Zeppelin would get together and do the halftime show. That'd be awesome.
Yeah, I remember when the Who did it. I thought that was excellent.
Way back in the day.
No,
many moons ago.
10 years ago, 15 years ago, they did it.
Yeah. Good stuff. All right.
Yeah. Well, we've got equities heading to the downside or continuing their move to the downside. We're starting with the monthly. Just touching on the VIX this morning, it's up about 6%, 1819. Still not a big number, but increasing day over day. This is the monthly chart for the December 2023 E-mini S&Ps. We've got the second down month well underway here. It's back to almost getting into an 8-month balance that occurred down here. We've been kind of talking and kind of researching and thinking about where the longer time frame traders are going to get back into this. We've been discussing on the way up that they were really kind of underinvested the longer time frame for the Feds or the banks and other longer time frame traders were really underinvested up here. They've been looking for a pullback for which to get into their reinvestment in these equities. So we haven't seen them yet. We'll be keeping an eye out for them. Take a look at the weekly chart now. We're just kind of going from the top down as we do every Monday. So 1, 2, 3, fourth week, looking like we're continuing to one time frame lower on the weekly chart. What does one time framing mean? It means we've got consistently lower highs and relatively consistent lower lows. We've already put in a lower low this week. This market is out of balance and seeking new levels to participate in two-sided trade. So far, this month, it's been pretty much all to the downside. Take a look at the daily chart here. So, the market was doing some coiling here, right? We've been talking about this triangle pattern for some time and how acceptance outside of it provides a continuation move that is doing relatively well. There are a couple of caveats to that. The volume has not really been barreling into these futures markets, to the futures. We've seen a pretty good increase on the New York Stock Exchange as far as volume is concerned. But look, on Friday, we lost about 8,700 in open interest. So the market did close poorly. It closed on its lows, but so far it's not indicating that there are new sellers coming into this auction to the downside. It doesn't mean that it can't continue. We've got 1, 2, 3, 4, 5 days of one time framing activity, where one time framing activity means pretty much all time frames are active in this downside move, but we're not really seeing that in open interest. So I don't think this thing is ready to fall apart just yet, although there are a lot of uncertainties out there in the world, right? So we've got a downside move that I don't want to step in front of. Now, where is this likely to kind of end, or where is a potential base for this? Well, on the regular trading hour daily chart, there is a gap back here that closes at 43.2550. We mentioned that last week. I think it's important to kind of close that to kind of close up some of the weak structure that we have down below here. Now, there's more weak structure below, but we've got to accept below this weekly kickoff, Lacey's weekly kickoff low here of 43.25 even. I think there's going to be a lot of eyeballs on this market looking for the market to get and to close that gap, and that's on the continuous chart, and regular trading hour session only. So you're not going to see it on an extended trading hour session chart. You'll only see it if you're looking at regular trading hour sessions. Also on the continuous chart, the August 18th low. So this was before the December was the front month, right? So the low in then the September on August 18th was, where was that? Where is it? 43.50. 43.50. So we're already taking that out. So looks like we're going to be opening below that. Here's the 30-minute chart. Whoa. Hey, whoa. All right.
Good morning.
Good morning. So we've got overnight inventory that is obviously now piling into the short side. We're going to be opening with a gap, so we're going to be using gap rules. We also, on the profiles, we have had our third late spike in a row. Now, remember, these late spikes where the market breaks late in the session and doesn't have time to accept price at those levels over time. So 1, 2, 3 late spikes. They're getting shorter, but it doesn't mean that they're not indicating that the market is continuing to search for buyers at lower levels. The auction to the downside seems healthy. There are things that I'm questioning about it, but it doesn't mean that it can't just continue to go. Sometimes selling begets more selling. So we're going to be opening with a gap below a late spike. That's marking acceptance of lower pricing. We're going to be looking for opportunities to sell strength until something changes. What's going to change, where it's going to change, that's up to us to kind of look at in real time and look for decisions or opportunities to limit risk. Remember, we're just talking about context here. We're not talking about the purchase or sale of anything. We're just taking a look at what we're seeing in the markets.
Right. And
it's important to be looking at that longer time frame. So the base of the late spike here in the S&P is 43.6250, 62.50, right up around settlement. I'll move to that settlement, to that base of that late spike, could be a decent opportunity for an execution. The part that bothers me is if we get back and we start showing acceptance in range, the afternoon pullback high right up here, 43.90, the afternoon pullback high would be a kind of a make or break level for continuing to look for opportunities to sell strength. Be careful of the base of the late spike settlement. And then if we continue to push higher, the afternoon pullback high again, 43.90, looks like a relatively interesting opportunity for us.
Beautiful. How about some NASDAQ?
Let's check that out.
The
NASDAQ.
Speedster.
All right. Here we go to the December contract now, where you start with the monthlies on Mondays.
There it is.
All right. So where are we? Well, we're a lot further from falling back into this area of balance on the monthly chart here. We've been one time framing higher. This is our second straight month going high to low or from high to lower. So the implication so far in the NASDAQ is a little bit different than the S&Ps. I think the NASDAQ is holding up better. Last week's low 14,792.75. Where are we? 14,803. We're still not through that monthly low from last month. We're kind of pretty much away from that in the S&Ps. What about the weekly chart? The weekly chart is, again, that August low, 14,792.75. This looks a lot more balanced up here than the S&Ps, which is kind of pushing on the top end of this area of balance that we were talking about on the weekly and the monthly chart. So the NASDAQ, I think, has a lot further to go to attract buyers, but remember how tech heavy it is, and lots of investors in those tech firms. So take a look at the daily now. All right, so the same kind of situation, right? We've got the triangle, so this triangle formation. It broke to the downside. Here's that August low that we are testing as we speak right now. Remember, that's 14,792.75. We haven't been able to kind of hold below it here just yet. 92.75. So we're looking at 82.25 as the low prior to the open. Interesting area. This weekly kickoff low 14,610, largely based off of a naked point of control from back here. We also have the measured move, which goes from here to here. And then from here, you take that measurement, that takes us all the way down to 14,385, which is a lot closer to the area of balance that we're kind of knocking on the door of in the S&Ps, but we got a long way to go before we're going to hit that in the NASDAQ. Taking a look now at the 30-minute chart. All right. So overnight inventory, certainly short. Opening with a gap, yes. Last week's low happened on Thursday, not on Friday. And did we put in a late spike in the NASDAQ on the profiles? No, we did not. We would have had to have closed below this line right here. The previous session low, which was here. Well, it looks like we did not really put in a late spike. That leaves excess here, but it doesn't change the fact that we've got overnight inventory to the short side. We're opening with a gap. I'm going to treat this area here as though it is a late spike. So the base of the late spike, everything is, again, a zone, an area in futures trading. There's nothing finite. So I'll look for a potential pullback back to settlement if we do reaccept and range. The afternoon pullback high in the NASDAQ is right up here. That's 14,978. So first step, second step after if we can't hold here, then I don't know what to do. Again, we're going to be trading what we see. We're going to be patient. We're going to look for opportunities to limit risk, and we're going to stick within our process and our strategy. What else do I have for you here in the NASDAQ? I think we're pretty good with that. Let's go to let's go to the crude.
Got about 5 minutes here.
All right, we'll get through these and see what it looks like. So here's the monthly in crude. 1, 2, 3, 4 one-time framing months. Price moving higher steadily over 4 months. We've got our weekly kickoff high here at 91.80. We're no longer in rollover. The open interest that we added here on Friday. Why is this not? I'm sorry. This is the monthly here. I'm sorry. I got a little bit ahead of myself. I'm very excited. So 3 months.
Monday.
Right. It's 3 months straight one-time framing higher. What about the weekly? Well, we had kind of a pullback here, ended up being a bull flag. We talked about that becoming a bull flag. The move continues to the upside. I think we're pretty tight on our weekly kickoff levels here. Want to see this market take out last week's high, this 91.80 level here. Now, let me double check something here. Okay, so is this market kind of telling us that it's a little bit exhausted to the upside? I mean, I'm going with no, because we had a higher range, And we added 43,000 in open interest on Friday. Is that new sellers or is that buyers continuing? I mean, the range was overlapping to higher. It didn't close very well. Now we've got an inside day here in regular trading hours. What does it look like here on the 30-minute chart? Let's scale this. So look at this. One, you start here, 1, 2, 3, fourth day, right in this range here. This is going to be kind of difficult and interesting. We're going to be looking at, this area down here, 49.28 as a potential lower extreme of this area of balance, maybe up to weekly kickoff high, 91.80 is a possible kind of upper extreme to the area of balance. But I'm going to be looking at this as trading balance rules. What are balance rules? Well, we focus on the extremes of the area of balance and we look for those for our executions. And if we do break out of this range, we have to go with it. So we fade the extremes. If there's a sustained breakout above it, then we go with it. But where are we? Overnight inventory? No. Are we out of balance? No. We're right in the range in the area of balance from Friday. So I'm going to try and stay patient. We do have on the profiles a week low on Friday. We're seeing, a degree of excess on all the highs. So the market kind of indicating, potential turn back or something. I don't know. It's not performing its upside movement like I would like. It's still very range bound here. So the upside continuation on the daily chart has stalled, at least for the time being. So I'm going to look for opportunities at the highs and the lows. Really going to try and avoid the juicy middle of the Oreo cookie here. Take a look quickly here at gold.
You got juicy Oreo cookies? You got to check those out. There's probably an expiration date on that. Okay. All right, gold.
All right.
Got about 3 minutes here, and we're going to bring in Mr. Patak coming up.
This is the monthly. I mean, we've been seeing on the weekly and the daily that this market is coiling. It continues to coil. Each month we put in a higher high, a higher low each month so far for the likely 1 to 3rd month where it's a lower high. The market is continuing to coil. Take a look at the weekly chart now. And there's the weekly. So we get an even better picture of the triangle formation, right? The market has tried to break out of it, has been unsuccessful in doing so. So the market continues to just kind of rotate from low to high. We're getting closer to the apex of this triangle formation. Here we are. I mean, it's going to either break out one way or another or sideways through attrition. Who knows what's going to happen? Look at the volume has overall started to kind of creep higher. We lost 1,000 in open interest on Friday. Maybe just some folks saying, the heck with this, I'm just going to get out, flatten out. We'll see what it looks like on Monday. We've got an inside extended trading hour range from Friday to Monday. We're not near either of the extremes. That's going to keep me somewhat patient today. Looking at the 30-minute chart, we are okay. So on the 30-minute chart, I mean, we've tested the lower extreme. We've tested the upper extreme. Both have failed. We're in the middle. What are we doing as far as overnight inventory? We don't really have much of anything to speak of. We opened here. We traded to here. There's no overnight inventory. The market basically trading back into range and value from Friday. Try and stay patient. There was something that did not happen on Friday. We discussed the idea that a potential repair day would be possible where we would trade either to this naked point of control or this one. Neither happened. We got pretty close to it in the overnight last night. Where's this thing going to go? I don't know. And it's really range bound. Look for the extremes of the triangle formation, and then if we break out of it, monitor for continuation. It's been very difficult at those levels. I mean, we looked lower, and we actually came off this, And once we tested down below this trend line here, we did the same thing up here. We tested above it. We even closed above it. And then the news came out and knocked it right back into balance and range. So just remember, we're in balance in gold. Be patient, wait for extremes to establish, and focus on those extremes for your executions.
Beautiful,
That's
Johnny.
my
Beautiful.
today.
It's beautiful. I loved it. All right. Well, you know what? We're going to be moving on to our next segment. But before we get there, I see that we've got a good number of people here, a little over 701. Hey, if you like what's going on here, hit like, smash, kick that like button. I only see 106, 107. Let's get that number up here today. If you're not subscribed to TopstepTV, you can also do that. Come on, hit that like button. You know, we're doing this for you, and we're doing this for us. We're all having a good time here. Lots of education. And coming up here next, we're going to have Fast Market. We're going to bring on Michael Patak, and we're going to see if there's any opportunity in this market where we can put some trades on, make some money, and have some fun. We'll be right back. And we're back. Fast Market. Welcome, ladies and gentlemen, boys and girls, animals, vegetables, and minerals to Fast Market. And Monday morning, look, we got Mr. Patak there, cracking the knuckles, getting ready, stretching it out. Game time coming up here. Game time. You're going in, kid. Welcome. Good morning, Michael. How are you?
What's going on, guys?
You gotta stretch out the hands a little bit. You know, you got to get the mouse fingers ready.
Mouse fingers.
It's so easy now to trade, John, versus in the pit.
Oh my goodness.
Yeah.
So much easier.
Oh, you
All
do
right,
it.
Good morning. Let's start the good mornings.
That's right.
With everybody. Good to see you guys. JT, aka Trade, Evan, Dan, Roy, Tiz, Andy. What's up?
So how was the weekend, Michael?
I watched Nelly perform
That's right. So it wasn't an old lady in an accordion, right?
No.
It was the real Nelly.
There was about 60 people there, and Nelly was performing. So I thought I like it was a personal or private. I don't know.
Did you get an autograph picture?
No, I didn't even talk to him, but I was close to him.
Hey, man, you ever think about trading?
All right. I know we're not supposed to talk about trading over the weekend, guys. Now we can, though. Here we go. Horses ready.
All right, the horses, here we come. We got a minute here, and get your horse in the gate. All right, inside a minute here, and you're going to be hearing the bell. Market's going to open up here very soon.
Same thing every week. Start your week very patient. High probability trades. It's Monday. You know how much opportunity is all the way till Friday afternoon? A lot. So stay patient. Look for those high probability trades so then you get yourself, here we go. So you get yourself a nice little cushion.
And the market is open.
Okay. Big number. 80% of NASDAQ folks are long. Let's see if they get these longs paid or if they're going to take them right out. Hoag, what numbers do you have?
In a second here. So we're opening with a gap, Michael. So we're looking at gap rules. Last week's low is right in the neighborhood, 14,836 quarter.
Okay.
So we've been, as you know, last week we had a pretty good down week. We've been putting in late spikes. We kind of put in a late spike on Friday, and we're opening below it. So that would indicate potential acceptance of lower pricing. Doesn't mean, of course, price has to go lower right away. We just traded to last week's low, again, 14,836 quarter. We got a little bit of a bounce off of that.
1436 quarter. So it's trading 30.
836. Yeah.
I'm short from 32 right now.
Okay.
And Jack, I'll share my screen. I haven't done it yet. I just covered. It's dancing. I don't like the dancing so far out of the gate. It hasn't shown any movement yet to the upside or downside.
It's still in the opening range right now.
Yeah.
Jim's, that's extended trading hours. That's everything.
Share my screen. Now here is a little weakness showing up.
Took out the low of the opening range.
Yeah, I just got out of my longs. So anybody who stayed in that long probably did.
I thought you were short.
Or sorry, short. Yeah, I got out of my short.
Where are you short at?
I was short at 32.
Okay.
And I had about 10 handles into it. Didn't do anything. Should have. And here's your big short. So I missed it. But like I said, lots of opportunity coming.
Yeah.
Hey, John, when you say weak highs and weak lows, is that the ETH or the RTH?
Yeah, that's extended trading hours. That includes the overnight on these charts.
Okay. ETH, extended trading hours.
I like to keep it really light in the morning. That's why I jumped out of that one. It was in, and then it wasn't. And then it was in, then it wasn't. Then it was around my entry. So to me, that's what I call, if you guys hear dancing, I say the word dance. I'm a really big rhythm trader. I get used to the rhythm of the markets. And sometimes I'm not in tune. Last week I had a losing day that I wasn't in tune. Had quite a few winning days. So I like to be at least in tune enough that I pull out a W. How about that?
That's all we ever want.
Did you scratch that trade, or did you make a little?
Yeah, I scratched. Well, I scratched it losing $100, so that's a scratch.
Yeah, pretty much.
I mean, that was a great short.
Yeah, the opening range remains the high of the session. And, if we want to just kind of think about what's going on, this is the 30-minute. Here's the daily. So this is the NASDAQ. We've broken out of a month-long or 2-month-long coiling situation, right? So we were kind of looking at this trend line as opportunities for shorts here and longs here, but we broke out. This is a bigger opportunity. Technically, this market, technically could continue this move to the downside, and the measured move takes us all the way down to here, 14,380. Let's just call it 380. Well, that's a pretty good continuation of this move. But what's going on around the market? We've got a lot of uncertainties out there. We've got GDP that the third consensus is expected to be higher than the first two, which indicates stronger economic activity, which means, I think, in the minds of a lot of investors and traders, that we're going to have higher rates for a lot longer. Now, that's somewhat already in the market, but more information to that regard might exacerbate some of these breaks. Number two, it's been kind of in the background for the past couple of weeks, but now we're getting a lot closer to a potential government shutdown, which may or may not really affect the markets that much, but the perception of the uncertainty of that is frightening investors. It's frightening traders, and that is another thing that is stacked against recovery from this move to the downside. We've also got, I guess the UAW strike is continuing, or is it not? I didn't see any big news about anything. So there's that as well, which is another uncertainty. And markets don't like uncertainty. So the current situation is the market is out of balance, seeking balance. I don't want to fight a market that's out of balance until I find some sort of structure that allows me to do so. Look at the past. Whenever we're going to learn something, let's look left. Well, we had this big move down that left an excess low on the daily chart. We don't see excess lows on anything while this market is continuing to move lower. We had an excess high up here. We had an excess high up here. We don't have any excess lows down here. So I'm not going to try and jump into this thinking that I'm going to pick the bottom. Another thing, gentlemen, that has been on our minds, we've been talking about this for a couple of months, maybe 3 months, is the longer time frame funds, hedge funds, banks. We've been suspecting that they were severely underinvested up here at these highs. They have been just biding their time, sitting on their hands, looking for a 10% pullback off this high before they can start to really kind of lean in and start buying some of these equities. And we're not seeing any real information that's saying that they're involved in this move to the downside here just yet. Mm-hmm. So I'm looking for, in the December contract, this is in the continuous chart. There's a big area of balance here. Now we're in a small area of balance here. We can see a small area of balance here. We're a lot closer to this in the S&Ps than we are in the NASDAQ. So if we're going to get there, the NASDAQ has a lot further to fall. So it's just the uncertainties that I'm kind of focusing on here.
What happened at 3 a.m, 2:30 in the morning, Chicago time? I mean, besides Europe opening up, right?
Yeah, that's the London Open here. Yeah, the London Open at 2. I'm not sure if there was any real news that came out. We could take a look here.
I'm taking a look. I don't see anything right away here.
Uh-huh.
If anybody's in the chat and knows anything, that was a pretty decent sell-off right at the European Open, London Open. German announcement. What they announced?
Yeah, it was a German IFO.
What they announced though? Do you know?
I'm taking a look here.
London session being quite busy. Okay, we're back up here. The 36s, 37s. It went all the way down to 82. Made like a double low from the night. Didn't break overnight low. By a tick, you could have gotten. I don't know if you could have gotten. That's carving the market up. But off the lows, I mean, we 30, 50 handles down, 50 handles up in 8 minutes. People, 8 minutes. 50 handles up, 50 handles down. I'm not saying he would have carved that up perfectly like Sean did, like what he did like last week or something like that.
So the IFO is a German business expectations. And it came out as expected or higher than expected. So better business expectations or climate in Germany was enough to knock the NASDAQ off its point of control from Friday and then just drive it to the downside. So
off its rocker, Johnny.
Yes, it got knocked off its rocker.
Plus the slows.
Market's very thin and illiquid during the overnight. If this was regular trading hours, this move, probably would have not have exacerbated as much as it did.
We'll get some more detail on that.
9 minutes into the open.
Mm-hmm.
Big moves. Now it's coming up here to
last week's low.
Which is again what?
836 quarter. 836 quarter. We're right at it. We took out the high of the opening range now in the NASDAQ. We have not done so yet in the S&Ps.
I think I'm a little early. Actually, I'm going to get out. I got short 37s. And I have a 15 handle stop that I put in here, and it's quickly going against it. But I still like your 30. I still like it up here in a short. But how much does it want to squeeze? All the way up here to 55.
Just close the gap from Friday's range. Here's Friday's low. We just closed the gap.
Okay, I got stopped out on that. So down 400. Got short again because I still like the shorts. 81% of NASDAQ folks are short. 72%.
They're short.
Yeah. I'm going to cover. Just keep that. So I am just going to hold off for a sec.
Yeah, I think when we left the opening range at the low of the session, I think we probably trapped even more overnight shorts and early weaker hand shorts here. When we took out that high of that opening range, this to me is looking very much like an inventory adjustment, just to close the gap, maybe come back to settlement, and we'll see what happens there.
I'm short 59s right now. Just got back in.
Nice.
So I need to take something off the board to get a cushion. I'm short 2 from 59s. I would like to get my cushion back. I like cushions in the morning, pillow cushions at night. I like the 59 still. Here's the 49s. Here's 10 handles, but it dances around 10 handles in the NASDAQ.
Right. Yeah, it's almost like the bid and offer are 10 handles apart almost, right?
Yeah, so I covered right now, so I'm scratch of the day. So.
Okay. Nice job. I want a blue sticky note behind you today.
Yeah, I know. Me too. Blue sticky notes, just so everybody knows back here, are winning days. I like to keep them, keep kind of a pulse on. Okay, it's back up here. That was a good cover. 48s I covered, sold 58s, 10 handles. Now it's dancing back to where I would have entered. Right here is my old entry. I still sort of like the shorts. Yeah, that's the gap close.
I mean, if it rejects here, this will be a pretty decent trade location, wouldn't it?
It would be, yeah. So if it comes, pops up here to the 60s, I think that's a good entry. But I'm still holding. This is my stream of consciousness. Nothing's for sure. John, what numbers are up here again? I got the 63s trading.
Well, we got last week's low. We're already above. We got Friday's low 852 half,
and it's coming right up to settlement. Return to settlement
is there. Yes.
Yeah, return to settlement's a big play.
And we opened the overnight session last night at 14,880 and a quarter, 880 and a quarter, 880 and a quarter.
All right. I'm short 61s right now. Don't totally like it. Just because.
Let us know what your position is. Post it here in the Discord, in the YouTube. Are you long? Are you short? Where'd you get in? Are you getting out?
Yeah. Jack, you can move it over to mine if you want. But 64s was what I short. I covered. Got flat on that. Scratch it. I mean. 59s, huh? 56s, huh? This is where your little weakness comes from. Oh, that was a good short up there in the 60s.
Settlement play.
It came up and touched settlement. If you give me 60s again, I'll take it, John. If you give me 60s again, I'll take it.
Well, you want me to buy them up there for you?
I just want you to go 60 bid. I'll go sold.
Let's see what happens.
All right, there's your 15 handles off the high. So to me, this is a real move to the downside. It's not really dancing after 15 moves or 15 handles, in my experience. But again, it still likes to play.
I'm sure that NASDAQ dome does look a lot like dancing, doesn't it?
Oh, it dances, yeah. Shimmy, shimmy, shake, shake.
Michael, what's your time frame on your charts there?
30 minutes on my S&P, on my NASDAQ, got them both up.
Okay.
And then to the right is 5 minutes. And you can see I'm down $85 at the bottom. I use this ladder all the way over here on the right. And then I watch the ladder on the left. The ladder on the left is dome ladder or whatever, is the S&P. The one on the right's the NASDAQ. Here's your little push higher. Now, S&P has not returned to settlement. Just something to think about, even though the NASDAQ has just touched it. The S&Ps have not.
No, we haven't even closed the gap yet in the S&Ps.
Yeah. So what happens if it doesn't close the gap?
Well, if the general gap rule is if it doesn't close the gap relatively early, we continue to look for opportunities for shorts.
Okay.
So
it did trade back up there to the 60s on that. 59s. 59s. I said I liked it at the 60s up there, but then I also saw it.
You were looking for 60 bid.
Yeah, so sold, John. Gotcha. I'm writing that one down. I'm short from 60s on a Johnny one lot.
I think compliance would have to look at that trade.
Yeah, you'd get a lot of bitching about that one. Wait a minute. I got paper here.
You just traded through a bunch of paper.
Yeah, oops.
Yeah.
I mean, when we say paper, it means orders from the desks, from the houses, and so forth.
Institutional orders, right? I mean, pretty much.
Yeah. Well, gold getting back up to settlement, 45.60. See if we can hold there. But in gold, settlement has been a nice little ceiling so far here today.
Yeah, it's no real overnight inventory.
No,
we just talked about it. It's kind of in the middle here of this point of control. This repair is likely. Just I don't see any great opportunity right where it is. I'm looking more for the extremes. This point of control and this point of control before.
What numbers do you have up here, John? Sorry, on the NASDAQ. Just
NASDAQ. Yep, you got it. It's
staying strong. Not like crazy, but I like a short up here somewhere.
So overnight inventory is pretty much covered now, right? We started the overnight session at 880. We just traded up to what, 880? High 8, okay, 78. So within 10 points of it. This is overnight inventory adjustment. Michael, we do run the risk. I mean, we opened with a gap. We've closed the gap, and now we are, are we going to reaccept value from yesterday? Meaning Friday, value from Friday. If that's the case, then, if we do reaccept value, then the opportunities for shorts are all the way up here. You got the afternoon pullback high, which is approximately 980, and then you got value high, which is 983. So it's all if we reaccept in value from Friday, we're not probably going to be looking for shorts for a little while. We're going to have to stay patient on that.
What's reaccepting? What price point above here?
Well, value low on this chart, volume value low is 14,859.
Okay, so we're staying above it. We're actually trying. Well, we're right at it.
We're trying, right. So if we show signs of rejection above this, then we're back into shorts. So it's kind of a long above, short below, but be careful with that, Michael, because that can chop you up. It can sit here and go back and forth, back and forth, back and forth, and cut you up before there's any real decision making.
Yeah, I know. I'm feeling it.
Mm-hmm.
I'm feeling it. Ofer. I'm down 300. No. Yeah, I haven't really. I mean, I had it right out of the gate. I was in the money really well. Would have had like a $500 cushion right away, which I like cushions because you start with 300, 400, 500 cushion on your first. For me, on your first few trades, then you get to like 900 or 1,000, and then you have a lot of day left, and you just start to feel out. Is this an opportunity day? And you keep trading. And as the window of opportunity closes, you conserve or protect or preserve your profits. And then you end the day with a W. I mean, I have no feeling to buy to get long anything right now, even though it is. That's why I don't feel like I'm in tune.
It's hard because we just had this whole conversation about how uncertainties are going to continue to drive price lower, right?
Yep.
So how do you buy it? But what we're seeing now is potential acceptance of value from Friday, which, kind of puts together that value area special situation play where at some point during the session, the price could move all the way to the other extreme of value. And that might be the good opportunity for us to look for the short. So just, it's the hard part about this, Michael and Eddie and everybody is what does acceptance inside Friday's value mean? Is there a rule around it? It's extremely subjective. Nothing seems to happen exactly the same way twice in futures. So the rule was always if we had two 30-minute bars after opening with a gap coming back inside range and value from the previous session, get two 30-minute bars that close inside of value, that would mark acceptance. But it's not necessarily going to go, well, with the second bar closed, bam, let's go, let's finish this. No, it's going to tease, it's going to come back in inside. And, the rule states at some point during this session, upon reacceptance of value from Friday, price is likely or probable. There is a probability that price could move to the other extreme of value, which again puts us up here at 983.
983.
Yeah, 14,983, all the way up here, and that's pretty much the afternoon pullback as well. So just price coming all the way back up here doesn't change the fact that the uncertainties are still out there, that we're still kind of in an out of balance market state in longer time frames, and we're still seeking more buying at lower levels from the longer time frame traders.
Okay. And speaking of lower time frame traders, those longs did get paid unless they had very tight stops. When I said 80%, I don't know, 10, 15 minutes ago, the market has continued to rally.
Yeah, they were right.
They're right. Unless they had tight stops, and the weak ones would have gotten stopped out. And the great entry ones probably were still holding the position, possibly. But take those profits. Now we're only at 60%. So I would say that sounds good. And you got the return to settlement from the S&P, and I forget who. That's a big pull off right there. That's a big pull back.
Okay. Here's a question coming out of YouTube. Sean is saying that, hey, I'm up a little over 7,000 trading NASDAQ. Still see some great opportunities. Do you stop just because you're up 7,000 on a single day, or still make trades if you see with tight stops? Well,
Go ahead, Eddie.
I'm going to say that, hey, if you're feeling good about today, just make sure that you manually put aside. Let's just say you put aside $5,000. You trade with two. Right, that would be great. All right,
there you go. Yeah.
But you can't touch the 5. You got to commit and dedicate. I'm not going to touch the 5. If I lose the 2, fine. If I double it, cool. You got to think that way.
This is like, I wouldn't continue, but if you're seeing it, like, traders can see things really well, and you're seeing things really well in the morning. But if you, Sean, you're a live trader, correct? You're trading on the prop account. And you can answer that in a sec.
Yeah.
And if you are trading on the live account, keep it in your damn pocket. It's my friendly tough love type, because 7,000 is a hell of a day.
That's a really good one.
Yeah.
Inner Circle says stop.
Yeah.
We stop and see.
And I think ICT is 1/8 or something like that of I forget what it was. You said something around that last week or 2 weeks ago. But 7,000. Let's just say you average $2,000. You go look at your trade report. What's your average? Because if your average is, let's just say 1,000, you're like 7 times that today. You got to look at your average, your daily profit or average daily profit. Because if it's not close to 7,000, or if it's like 4,000, you're still doing a hell of a day. You're doing almost twice what you typically average. So this move, this big day that you have will pull up all those averages, and that's what you want, because you also want to pull up your confidence, but and put it keep it in the sweet spot that you got today for tomorrow and for the next day. If you're not doing that, then you are putting your psyche at risk of losing all this. Or even if you bring it down to 1,000, you're going to be so bummed because you gave away 6. So I would probably echo what ICT said and stop. Just stop and go for a run. Go work out. Do something healthy, because you just gave something healthy to your trading account. Go do something healthy to your body.
If you need to trade, practice account. I mean, if you got that itch, it's up to you. You're the boss. You're the CEO of your account.
What's John?
I got a couple of thoughts for him.
Yeah.
If that's your best day ever, walk away.
Yeah.
If you're doing that consistently and you're feeling like you're in tune with the market, you can do one of two things. You can do what Eddie says. You can take $5,000 of it and tell yourself you are not going to lose more than 2,000 of that 7,000. That requires a little bit of discipline and your ability to be able to swallow the anger that's going to occur should you lose 2,000 of that 7,000. Then there's always, you give yourself one more trade. If that trade is a winner, that buys you another trade. If that trade is a winner, that buys you another trade. Your first losing trade ends your day.
Yeah, I like that one. First losing trade ends your day. And don't move your stops. Take that loss if you need to take that loss. Don't get married to anything. In the trading world, you can go get married with anything.
Inner Circle says
he is right. He's saying, as soon as you question it, then just walk away.
Yeah.
It says as soon as you need to question it, keep still
John, these 86s are here. I got short. I got short of one lot, just a small one. I need a winner here. I got short a small one at 85. I know I'm being biased on the short side today. And Jack, you can move over to my screen. But
well, I think your bias is right. It's just timing and trade location.
Yeah. And return to settlement to the upside. I like this quick move out of the gate. You guys can see I'm short right here at the 85. Just a one lot. I mean, I got to get some blue on the screen. And I like to have a good cushion for the day. Short from 85s. It's already done a 10 handle move. So this is, if it comes back up, then I think it's still dancing. There's your 15 handle move, sort of.
Hey, I'll buy those 60s now.
Yeah, right. I'm covered. 240 down. I got to chip away. No, I didn't enter on a motion trade. I don't really have, right now I'm speaking with John, so I don't really have, if I was sitting here by myself trading after this many losers, you know what? I had 3 or 4. And I'm only down 240. So I'm going to keep it tight, get that back blue, and then increase my size. Now, you guys do whatever you want to do. I do not sink my teeth into. I'd probably be close to my loss limit right now if I had 2, 4, 6 lots, any of those. So I don't like to do that. That's a bummer. I don't want to be done today like Sean, but a completely opposite day, right? Sean, hint, hint. I'm out of the gate, Sean, trading like crap. You are crushing it. You're on a live account. You're averaging $3,000 a day. You just said you just put up your double your average. So if you hold today, your average will move up really nicely in a way that is very positive again for your psyche, because then you can go into each day and be like, man, I know I could put up 1,500. I know I could put up 2,000 because my average is 3. I know I could put up 3 on average, and that's a really good feeling to be in. When you're a trader, to know what you can put up. Seriously, to know what you can put up. If you don't know what you can put up, then you're still on the game of figuring yourself out as a trader. And when I say putting up a day, if you're not averaging 0, you need to focus on 0. That's a scratch trader. Scratch trader is a great trader. Mm-hmm. And then you get to 0, then you're like, okay, I've been averaging 0 for the last few weeks. Now I'm averaging for last month. That should be a level of confidence you want to get to first Everybody's like, well, hold on, I got in this game to make a lot more money. Yeah, you'll get there if you start slowly chipping away at just knowing how to go into the markets each day and to put up a day. 85 is trading 74s. I was short 85s, covered 74s. It's trading 76s. It's trading 80s. It's above settlement for the S&P. It's above settlement for the NASDAQ. It's been showing strength all day, but there's a point here where, to me, this market starts to cool. But where is that, John? What else do you have up here level-wise?
Well, the S&Ps are trading to the base of the late spike that they did put in on Friday. So that base is 43.6250.
43.
It should be somewhat pivotal. Okay, we just traded to it. We just traded off of it. Now it looks like we're kind of coming off a little bit, but this is just very short time frame. The difference is the NASDAQ didn't leave a late spike, technically. NASDAQ is already testing into but not showing acceptance of value. This is value low in the S&Ps. It's all the way up here at 43.72, and I'm checking that on another platform here, or 43. Yeah, that area, right? This whole area is a zone, right? So the S&Ps are presenting as weaker. The base of the late spike is so far providing potential resistance. So if I was trading the S&Ps, and Amanda, this should answer your question. I like it because it lets me limit risk, right? I can take this short, risk maybe 5 points, and if it holds, the late spike holds, then I'm in good shape, which right now it is. Right now, I mean, we're already sitting in 4 or 5 points of potential profit here. So I do like that. The base of the late spike should be resistance if it's a true late spike, where the NASDAQ is not a true late spike. It shows more rejection of price at the end of the day on Friday than the S&Ps. So I do like the base of the late spike. Amanda, good eyes, nice job. But as far as the NASDAQ is concerned, let's go back and have a look see. So there's a little bit of a difference between platforms here. So this is the NASDAQ profile from Friday, right? So it's showing volume value area low all the way up here. So we have not necessarily through volume shown acceptance of higher pricing. This is the TPO value area low. We're showing rejection of that level. So when the market opened, it closed the gap, it tested into the value area, the TPO value area, and left a late spike. And left excess. It left a selling tail here. So this gives us an opportunity, should price get back to this area, to limit risk up against this. And it's just a different platform. So, volume value is not presenting the same on this platform as it is on another platform that I prefer.
Well, I said that might cool off. It's clearly pulled back.
Mm-hmm.
Yeah, it's clearly pulled back. This is a nice pullback.
Yeah.
Guess who wasn't on it, John? That's why I'm not feeling the rhyme or reason.
Mm-hmm.
I'm seeing it, but it's not the right time frame, or my entries, of course, haven't been swell.
Well, I'm of the frame of mind, and I think you are too, that we're looking for opportunities for shorts. It's just hard. I'm liking shorts even more now, looking at that other platform showing that we've rejected TPO value low from Friday, and that volume value is actually a lot higher on Friday than this platform is showing.
When you say a lot higher,
So here's
what was that level higher?
okay. That level.
Well, what's the level down here really quickly that you had in the 850s or 48s or 60s or something? I forget earlier. We were talking about
that
it.
would be the kind of the base of the late spike or the assumed late spike, which is basically settlement. Then we've got the low from Friday, which is 852 and a half.
852.5. Okay. I need to start writing. See, I'm not even. I got to write. I'm not liking how 50. So it was just 50s. I did just come down to 50 half.
Yeah, that's kind of pretty close to the low from Friday, which is 52 half.
All right, 52 half. I got long 56 half. Jack, if you want to pull it over. I don't, because your 52s are hit 50s. So here's your 10 handles from there. Okay, looking to get. I just got 71s. All right, so there's a one line. I'm trying to dig myself out of a hole here. That was a nice winner. Took really no heat on that one, but I'm still down because I haven't been able to
Sink your teeth into anything, right?
Teeth into anything, yeah. So you just saw down here 56. My orders are right down here at the bottom of the screen. So here's your 59s, 50. And I would have been long 56s still if I would have not have gotten out. Now there's my heat. No, there is dancing around my old entry. There's my old entry. There's my heat if I had my own. I like to think like that because I'm like, okay, if I would have kept that one on, what's my lesson I'm learning right now? That the market's still not showing too much strength. Mm-hmm. Gave it a little college try on 15 handles, which I always said if it moves past 15 handles, I'm pretty wrong.
Yeah.
I'm not really scalping on a 30-minute chart.
No, it's just kind of bigger context for you, right? I mean, you're looking more on that 5-minute, right?
I'm looking at the 5-minute for an entries, yeah. And then once I build a cushion, I'll have more lots on, and then I'll ride these moves for bigger than 15 handles. It's just when I get in out of the gate, I need to get my cushion, just because it gives me knowing that a fact that I should be able to, the day should end with a W. Days got to end with W's for me, or else I start to get a little second guessy.
Well, it's a confidence thing, right?
I protect it. I protect it at all costs. Because protecting your confidence means you're preserving your capital.
Mm-hmm.
Take notes if you want on this, or just let it go in one ear out the other. But I'm just sharing my stream of consciousness and how I trade. To each its own. You have to find your little sweet spot on trading. Mine is all those things that I talked about, and then understanding, not forgetting, muscle memory. It's a good pullback off that move. Right when we were talking about the strength of the morning and then looking to cool off.
Oh, you do see gold heavy here. Downside of watching crude pulling back a little bit. That's what I'm watching here today.
That Amanda, you picked out the base of that late spike in the S&Ps. That's a beautiful thing. Here, we'll take a quick look at gold. Oops, hang on.
Yeah, we've got.
Well.
Just kind of looking at the possible check of the overnight low here.
Loki. Yeah, Loki, you were looking for the pullback here. Were you looking at the pullback up there when we were talking about it starting to show some weakness? Running out of gas. Crucial spot here for indices. Why is that? Conscious investing. We don't want to lose the 40s here. Okay. Here's your 46s. Here's your 46s. Here's your 47s. Here's your 48s. We did just bounce off the 40s. So conscious investing, and you're watching those 40s. Not Edward Scissorhand 40s. I do like a long possibility here if you get a flush down.
Yeah, last week's low.
Last week, what is it again?
836.
36. And it was just trading 40s.
You got a tilt update?
Minus or 71% of folks are short S&P and NASDAQ. That's really like the heaviest tilt. Gold is 50-50. Crude oil is 52.48. Long 47s down there would have been good. I was looking for the 30. I was looking to carve it up really tight on the 35 area. There's your 10 handles if I would have gotten long when we were talking 46s to 7s. You're already in the 10 handles.
You know, the last week's low here. I mean, you can just look at this on the chart. You know, look below, rejected, rejected, rejected. Look below, accepted, accepted, rejected. That's a line in the sand right there. That last week's low.
All right, we'll test the 47s again. Give another little sell-off, push down, college try. Caesar degrees. I mean, I really like a long somewhere in here. I'm going to risk 15 handles, which puts us down at like the 30 to 35 range. So that's kind of where my hesitation is to get long.
Well, I mean, your nuances are to the short side.
Say that one more time.
The nuances, to me, are all to the short side. With the S&P stopping at the base of the late spike, no acceptance of value from Friday on either product. Looking at the 30-minute chart, I mean, lower highs, lower lows, uncertainties. I think the only thing that's going to create a rally here is if we're all too short.
Yeah, conscious investing, up 3K, taking a walk, as in calling it a day.
Nice job.
Sean, hopefully you're doing the same with your 7K. That's, in my shared experience, I'm not ever giving people advice because advice means I know more about your situation than you do. So I'll give you my shared experience. Take the money and go mow the lawn. Or if you don't have a lawn, go for a run. Or go make a sandwich. Or go play video games. Whatever. Just keep it in your pocket. Good to see Conscious is doing that. Hey, Daniel, Michael, and John, do you guys still journal during some of your trades, or do you use the? I use the stream. I'm using the stream right now as a stream of consciousness. And hopefully my trading buddy John listens, which he does, and then he can remind me kind of what I was thinking too before that. But that's what I would be journaling right here, but I am having a notepad right here with levels. Here's coming down to your 40. What was it? 47s. We were liking before. Now it's 53s. But we liked the 35s down there because it was low. Is that what we were saying?
Well, the 35s was last week's low.
Last week's low.
Got a question from Fred here. Hoag, I like your idea of selling the S&P 500 short at the base of the late spike, 43.62 half. I see a poor high right now at the high of the profile. Does the poor high worry you?
Always.
Reason why?
Well, let's define a poor high. Well, this is the high from the S&Ps. The first 30 minutes high, 43.64 quarter. The next 30 minutes high, 436.40. It's within one tick of each other. Now, this is a kind of a mechanical level. I mean, short time frames know what the regular trading hour high is. price was able to reach that level again. But it's not a true poor high. A poor high would be B period taking one tick above A period. It's just not a very strong. It's a no excess high, and yeah, it does worry me, especially with the amount of excess we're seeing at the low right now. But it still allows me the opportunity, with this being the late spike, the base of the late spike, to limit risk against it. Sometimes a weak high is just telling us that buyers ran out. And sometimes timing has a lot to do with that too, Fred. I mean, if A period ended here, it's already kind of set up to put in a weak high. And now we're seeing price, at least testing to the downside. So yeah, it's always of concern. We Fred, we were talking in gold there in crude this morning. We have a weak low on the low on Friday. There's a weak low. Where did the market just try and test to? It went down to try and test to this weak low. So this would be a good target, or even a possible entry level up against it.
Okay. All right. Thanks, John. Jack, are you ready we got something for our viewers here?
Nice.
Oh, we've got the hot streak, and here comes the fire department. Hold on, guys. Hot streak here. We got Timothy G with 11.
Hold on, Eddie. You have a fire truck coming to the hot streak, which means you try to cool them down. I don't know.
No, these firemen are all pyros, so they've been a little bored, so they're starting their own fires.
Yeah, they put fuel on the fire.
What do we got there? We got a
Practice fire.
The Coast Guard. Timothy G with 11 days, 150K account, 3,239 total profit. Cameron, right, knocking on the door. Right next here, we've got a 50K account. And what's nice is he's got the 50K account. He's putting up $1,700 plus on a 10-day streak. We've also got Jenna, 100K account, 9 days, 3,165, and Stephen L with a 50K, 9 days, 9-day streak, 2,562. So far the record here, we're looking at 11 days. We'll see. We'll check out tomorrow and see if these traders are still on the hot streak.
The record's like 14, but we just kept track of that. We didn't go back in the past. Since the show started, it's 14. ICT, is this Cameron, your son? I didn't want to call anything out because of that, but if it is, hell yeah. Hell yeah. Good to see your, I got a 5-year-old, a 4-year-old, and two boys and a girl. And my God, if one of them starts trading with me, it's like playing football with, if I'm Tom Brady, well, I'm not saying I'm that type of trader, but playing football with your kid, if you played football on the professional level. And it would be great if he was way better than me. I'm like one of those dads that I hope you're just like way better than me.
Well, you were a receiver for the Hawkeyes, right?
No, for Iowa State. But when we say that I was high school good, I was not college good. I was fourth string. So Eddie, sounds like Cameron's up 500 today, which means if he's learning from his dad, which sounds like he is, he's going to keep that day in his pocket. A W. Take the W any way you can. Yeah, so we might be seeing him on the fire truck pyro leaderboard tomorrow.
There you go. Yeah, take that win any way you can, just like the Packers did with that bad call.
Oh God.
Any way you can. Yes, any way you can.
I don't know what's worse right now, being a Bears fan or living in Colorado watching Denver play.
Well, you've got the Panthers, you've got the Vikings, you got the Broncos, you got the Bears, all 0-3. So it's like, what's going to happen? It's just a nasty crash.
Keep them coming.
Yes.
Okay, we're trading down to the 49s. Those are the 47s that we were talking about a while ago. You would have gotten a good chunk of change out of that. You would have had 30 handles on that position because it did go down to last time I was down here, it was at 37s.
Yeah, last week's low.
Hey, John, what's your TPO platform? Dale says, please answer.
That's the T4 platform, but it's a pricey platform that we don't administer in the trading combine for the at least for the TPO charts, the market profile charts.
Your levels down here again were 35s.
Yeah, 36 quarter, last week's low.
Last week's low, got it.
That is also 35 is the high of the opening range. The high of the opening range. So you see that green dot right there. That's the high of the opening range.
Yes.
Gold took a tumble here.
So then 36 is. I'm gonna get anything below 40. I would love to take.
So you're looking for longs.
I'm looking for longs again, or not again.
Anybody trading gold? I mean, we just had a fallout here, nasty fallout in gold.
There it is. Yeah, the dollar's looking pretty strong. This gives us a potential opportunity. Oops.
46s. Who was saying keep above 40? We got to keep above 40. That was a trader earlier. I forget. Okay, I got long 42s, one lot. I got a 15 handle stop. So, like, I'm okay with it because I if it doesn't hit the 36s, I'm in at the 42s. And then I still have 6 handles of heat that I would have taken.
You're right back here down there at 36. Pretty close.
No, I'm long. Yeah, sorry. There you go. Nice cover. 14.842.
So right here.
So right here, right now. I mean, if it's going to continue to dance right here, which I'm not doing anything yet, then I typically always think I'm going to get squeezed.
It's last week's low, opening range high. The low volume node.
Oh, yeah. Low volume node. 35s. 35. What's the low volume node?
Right here, 36.
36. Ghost, I appreciate that. Like, I'm not saying I'm going to be right all the time. Nor will I be. There's your 36s, right?
Mm-hmm.
Here it is right here, right now.
See, it's an interesting long, but you don't want to lose a lot on it.
No, I know.
Especially, when our bigger picture context, everything is saying the opposite.
Yeah, I covered 38s, 42s to 38s.
It's.
But here's the thing today, John. Every time I've been covering, it's been ripping that direction.
Yeah.
So my timing is like way off. So no in tuneness thus far today. There's where I would have been long. There's where I would have been in the money.
Mm-hmm. As the opportunity played in short time frame, it was a legitimate opportunity to take along there, but something that you don't want to fall in love with. And it did not prove to be wrong while you were in that trade.
Did not prove to be wrong while I was in that trade.
No, because what was the low? The low was
35.
34 and a quarter. You went 2 points below that last week's low, that kind of pivotal area we were looking at. That's not enough to prove a trade wrong.
I know. I'm off as off can be today. Just got to keep it light, keep it tight. I'm only down 300, but I've been wrong so many times that could be with 2 lots or 3 lots because I'm like, I want to trade size out of the gate. I would be down at least a couple thousand. And I don't like being down a couple thousand Monday morning, especially not even an hour into the market.
No.
Got so much opportunity this week that a couple $1,000 a week is a great week. 100 grand a year if you're averaging 2,000 a week, which isn't terribly hard to do. It is, everything's difficult to average that for a year, 100%. And you'd be like, hey, I made 30 grand a day. Yeah. What's your end of the year look like? Let's talk about that.
Right.
Michael, I like your voice for the person that trades size.
What is it?
It was like, oh, it's Monday morning. I'm going to trade size.
I know. It's just like trying to be my acting on a cocky guy that's just going to take it all. Okay, it's down here in the 30s again. Now, I would have been taking heat on my 42s all the way down here. So I like the longs. I like still being long, John.
No, you now I think you're kind of being proven that trade is wrong.
Well, I would have been stopped out. How about that? I would have been.
Yes, that's proof.
That's proof. But it's also bad position could mean for me when I'm off, when I'm getting stopped out, those are really like times that I'm so out of tune that's actually great entry points around there.
Right.
But
Gold once again getting really heavy here. New lows in the gold.
How low can you go?
So we're seeing a big drop off here in gold. It's dumping off.
Yeah, we're getting to that testing area here. You got last week's low, 1933. You got our trend line on the daily, which failed below before, test down to last week's low. Ooh. 9 o'clock. What the heck happened there?
Yeah. What do you got? Was that 1933? You've got
That's
there
last
gold.
week's low.
Okay. Yeah, that's probably the first target.
Mm-hmm.
We see here.
Yep.
And then what's that 27 line? That's just
That's weekly.
it's a weekly.
Lacey's weekly kickoff low.
Okay. That was a question asked before. If you do see John's charts, the white lines are the WKOs, weekly kickoffs. And if you don't have them in your email, you should sign up. We put those. We share those every Monday morning.
areas of importance. Yeah, areas of importance. John, I did get long down here at 20 quarter, just a one lot.
Okay. That's basically the low of the opening range.
Yeah, low of the opening range. Give me that. There you go. There's 15 handles. I'm only down $100 now. God, getting out of the hole, man. That's why you don't. Here's another thing that I learned this, and again, to each its own. When you're in the hole and you haven't been able to get out of the hole, and it's an hour in the trading day, can't get out of the hole. I highly recommend don't increase in your size. Do not increase your size. The goal is to get back to zero, like the day just started, and look to build that cushion again. Because remember, there's a lot of day left, and you can build a cushion. 33s, 35s. You can build a cushion, and then get that W for the day. W's are really important, really, really important. A winning day.
Yeah, I haven't been able to do anything because I was having connection issues on this platform and on this computers, but that's now been resolved. So if we see anything, we'll figure out what I can do here.
What levels do you have down here again? In the 14 in the NASDAQ, 8 what?
Well, you got our overnight low, which we tested down to in regular trading hours. So there's a little bit of a weak low here. That's 782.5. Then you've got last week's low, which we're right near here. That's that 836 level. We've got our regular trading hour value area low is TPO is 815, but volume is higher. Volume value is higher at 858.
Here's your sell off. It's not showing too much strength. 858. Okay, what was it low, or what was it down here below the 20s? Anything?
Well, we got TPO value low at 815.
TPO value low 815. TPO value 815. It came close to it. Okay.
Yeah, and it's basically the low of the opening range as well. 815.
Hold on, it hit it. 15 quarter. That counts.
Yeah, and just in the previous 30-minute period, yeah, it did. 15 quarter, that absolutely counts.
Yeah.
Everything's a zone.
Ish, yeah. Okay, I'm still looking for a long down here if it wants to test again. 60% of S&Ps are short. 75% of NASDAQs are short. So we got shorts showing up, light. Longs got paid on the way up.
Good to see you, Jason. You're a bit of a contrarian today, aren't you, Michael?
Yeah, I am. But when it kind of pulls out, like, look at this 30-minute bar. If you got it open. Yeah. Oh, I got it open. Yeah. It's down here. See all those ones that open, close, two back.
Yeah.
Yeah, that was overnight, sure. But it found something down there.
Yeah.
And
it's a little indecision, but I mean, we haven't closed a 30-minute bar below this 20 level.
I know. So we had all those longs getting paid on that out of the gate bar, green one, two back. The one just back was when we talked about it getting a little soft or whatever. That was a great pullback. It's back down here after being all the way up at the
with this 30-minute bar, that 830 bar puts in a poor low at the bottom here, including the overnight low. This is a poor low.
It's a poor low. What a poor low in your definition to everybody listening is what?
It's an unfinished downside auction. In other words, there was no excess here. Price was able to come back down to this level over a period of time.
Okay. 40s were who was talking about the 40s earlier, staying above or below? And Johnny, do you think 40s are anything super important about that right now?
I don't see anything like on this or really on the profile other than, 39 is the TPO point of control, and 39 is half back. It's halfway through the entire range of the regular trading hour session.
Mm-hmm.
So you're getting right in the middle here.
Yeah, but up there in the 50s and 60s to 65, excuse me, is was a lot of it traded there for a bit.
There's some volume like right around 70.
Yeah.
And 60. A little bit of liquidity there. But TPO value high is currently 873.
873. Okay. I just sold 61s on this rip higher because I was just talking about the 54s and whatnot. And John talked about the 70s. That's a 10 handle. That's a 10 handle heat. So I might have a 15 handle stop. So I would have been okay still.
Lots of good conversation here in our YouTube channel. also in Discord here. But good stuff. Everybody sort of backing everybody up, giving some suggestions and where they are present. If you like what's going on here, traders, we'd appreciate it. You hit that like button, smash that like button. Let's get that number up here. It helps us with the algos, helps us get out there a little bit more. And if you haven't subscribed, by all means. Another question was looking to join our email. If you want to, go to topstep.com. The information is on there where you can join up and get that email every Monday morning.
You get Lacey's numbers.
Yeah. Those that don't know, that's John's dog that was calling trades last week. Every time 2 marks would happen, you needed to get short. Joking, but
Today she's been very quiet.
Well, maybe she's just as out of tune as I am. Crickets.
Yep. Mondays. So what are you right now? You're long?
No, I covered. That was a short lift. I need to get. I'm only down $155 now. I just need to get in the blue to feel better. And when I say feel better, get my confidence there. Get on base. I want to get on base, and I've been striking out.
Yeah, me too. Me too. It's strange doing this on screen.
We got. Is it more? JT goes. Is it more of a range now? If you're talking about the Nasdaq, I mean, like if you go back to 1, 2, 3, 4, 5, 6, 7, 8.
This is the 5-minute chart.
Yeah. If you go back to the 30-minute, I mean, it is sitting in that since the European Open.
Right. Yeah. The A period, the first 30-minute, is the entire range of the session so far. If that remains, this will be a normal trading day, which is kind of a misnomer. It doesn't happen that often, but it's range bound. A lot of questions out there.
There's a comment coming in here from our Discord channel from In the Trade. A lot of us, when we get close to getting that funded account, when we're in our trading combine and we're getting very close, a lot of us seem to want to rush to get there. This is where you've really got to pull back a little bit and take some smaller steps just to make sure that you're moving forward and you don't have a bad day. And you hear a lot of it. It's like, I was 200 away from passing the combine and I tried to get it. And now I'm down $800 today. That's just it. It's like building that pyramid of cards. When you're starting to get to the top, things slow down a bit and you're more cautious. So if you're in that position, slow it down. You're almost there. Okay. Yeah. Do not swing for the fence to try to get it all, because the odds are you might strike out. You might put yourself deeper back from getting that funded account.
Base hits win games. Yeah. I mean, a good example of that is we'll go ICT's son, Cameron. 10 winning days in a row. You get a 10 winning day in a row trader that's not have their psyche or their emotions managed well. They will start to enter the world of cockiness. And what's great about seeing ICT, and he just said his son's up 500 today. It's just another nice base hit day, double hit day, and base hits do win ball games. And I'll put up another W if he ends the day, positive, and he's got a good cushion, 500, and he's got a 10-day win streak. So there's a lot of without looking too deep into anything else, that shows that you got yourself under control. That you're not like, okay, I got 10-day winner. How much did I make in the last 10 days? Okay, $3,000 today. I'll risk $3,000. No. You want to keep that base hit. Chipper Jones. You guys ever remember Chipper Jones? Base hit. He's just a hitter.
Braves, Atlanta Braves.
Yeah. Wasn't a big home run guy, was he, Eddie?
No, I mean, if you go even farther back, somebody like Pete Rose, Rod Carew,
Yeah.
You know, they hit for average, and they were all-stars. And obviously, Pete Rose didn't make the Hall of Fame because of his gambling. But people like, Rod Carew, I mean, he always really never hit the home run. I mean, there's a lot of players like that.
You remember, Eddie, you remember Bobby Richardson?
Bobby Richardson.
Ichiro.
Ichiro's another one.
Scott
Cheater.
Pasenik. I had to come in for a moment to defend the honor of Chipper Jones. He hit 468 career home runs.
Yeah.
Okay. All right.
Well,
I didn't think he was a big
he played long, though, but he had a good average. Ty Cobb's another one,
Jack, once you say, and I think I would assume you do enough base hits, you got a good confidence zone when you get another at bat, that you start to increase those odds of sending one. I mean, to me, it's a lot better than striking out, and then like sending one. Having that strong confidence, getting to the plate, seeing the ball well, everything kind of slows down a little bit more. We use the analogies here of baseball quite a bit, guys.
Well, it's because, I mean, you're put on the stage. And basically, when you're trading, you're the same thing. You're put on the stage to perform the best you can. And when you don't, I mean, whether there be an audience, crowds, or anything, it's going to affect you. I mean, same thing, too. It's, a lot of these professional athletes do have bad days. We all know this. The pick six, the grand slam pitch. And, what makes them good is they come back and wipe it off. All right, today's a new day. Today's a new game, and they move forward. They know how to move forward the best they can. It's those that sort of wallow in their losing, or their mistakes.
Then you start to flounder in your performance, and then you start to just spiral down.
Right.
True talent does rise up. You can get yourself there. It does take a lot of work, but if this game was easy of trading, everybody'd do it, and everybody thought it was an easy game. And the memer world, the memer times.
Yeah.
What was that? 2021, end of 2020. Everybody sitting at home, AMC, GameStop, this, Bitcoin, that. I had a lot of conversations with friends that have never traded before that are talking, and like you're like, and I guarantee you, a lot of those folks are stuck in positions that made those stocks their long-term position, long-term portfolio play.
Right.
I know that happened to me way back in the day. You take so much heat on it, you just, okay, well, it's going to eventually come back because all stocks come back. No, they don't.
Some of you that are listening as Ghost and Panagiotis says that American baseball and American football are mysteries to me. Well, basically what we're saying is in a professional sense. I mean, if we want to talk soccer, it's that free kick that can win the game, and you shank it right, or you shank it left, or the goalie blocks it. I mean, you've got to sort of rise to the occasion after you've been shut down. Okay, I'm going to have another opportunity coming up here. I'm going to focus, get back in the game, do whatever I need to do. That's what we're talking about when we say professional sports versus professional trading.
Yeah, it's just professional level, like mindset.
Yeah.
I mean, you can do it with musicians. You can do it with, chess. I don't know. I mean, like everything takes a level of discipline, a level of. They all have a level of discipline. Except maybe John Daly. And being great at something and having no discipline, but I guarantee he has discipline and something in his life that made him a great golfer. And then I'm talking about John Daly, drinks, smokes, and like all the things that you wouldn't want to do if you wanted to be good at golf. But he is an anomaly, I would say, of sorts.
Dan says it's very funny to hear U.S. people talk about soccer.
I know, right? Hey, we got Messi now over here. We got Messi.
And we're not talking about our trades. We're talking about the player. But anyway, I'm not too educated on soccer.
I think you did reasonably well there, Eddie. I was waiting on the other end of this for.
Did you play, Jack?
Soccer when I was very young.
Oh,
tennis was my sport.
Tennis.
Oh, okay. See, now the thing is, when I was growing up, there just was Little League baseball. Then they started to get into Pee Wee football. But now all the kids are playing soccer. So give it about 10 years, and we'll have somebody on there that knows to talk about soccer. So give it time. A lot of big soccer leagues here for the kids in America.
Yeah.
America.
Isn't that why Messi took a big pay cut to come here? I mean, he is jamming packed games now. And he's making it very fun to watch.
Well, he got a piece of the ownership too, and also
the league.
He's got more money than God. So I don't know if I had $1 billion, I don't know if you could pay me another $1 billion to move where he would have got that $1 billion. I'll catch my tongue there.
I don't even know where that is, but we'll keep that out. But
our good friends in the oil markets.
Oh, okay, cool. Yes, I mean,
I'm sure that he's got a good sponsorship. Somebody just said there he gets percentage of ownership. Mm-hmm. I think we gave him the state of Connecticut. What else did we give him?
I mean, him and Beckham kind of had this. I'm sure they come on over. Let's go grab drinks and let's talk about how we can bring soccer to actually a mainstream sport here in the States.
Well, it's like we bring football to Europe, or American football. And what did we have? We had we played in Germany, I think, preseason, and the stadium was packed. And then they played John Denver, a John Denver song, and everybody knew the words to it. Remember that? I mean, that was pretty cool.
My brother used to live in Sweden, and
I'm a country boy.
Yeah. My brother used to live in Europe like 14 years. He just moved to Austin. He's a video game developer. And he's like, all his buddies became really into fantasy sports, fantasy football. They got into it. So he's like, it's blowing up. He said that. He's like, it's growing really fast around here. Maybe it's just his circle of friends, but felt like it, he said.
Yeah. Well, open for anything, just was it play a pickleball? I just hope that doesn't get out of the United States.
You want to keep that one here contained?
We could rename it and then send it overseas. I got to play some pickleball.
Yeah. Okay, back to the markets real quick. John, what is this market telling you right now, besides in the middle of the range on NASDAQ, and then in the middle of the range really on the S&P?
Yeah, it means I don't want to do anything right here. The S&P have put in, as our good friend Fred pointed out to us, it's not a very strong high. But we have the base of the late spike, which has shown signs of rejection. We don't have any real sign of acceptance inside value yet in the S&Ps, nor do we have an inside of value in the NASDAQ. So if our bias is to the short side, we're looking at opportunities for shorts, and the current daytime frame high is one of those opportunities. I mean, it allows us to keep it relatively cheap. I have a feeling there's going to be a whole bunch of stops above the high in the S&Ps, which could offer a good entry.
I'm short from 60s right now.
In the NASDAQ.
In the NASDAQ. Yeah.
So, the base of the late spike, if this were a true late spike, would be the closing of this bar, which is 866. So, your rejection of value, the base of the late spike, which didn't really hold earlier, does, it offers an opportunity. You're short now.
I'm short right now. I'm good now. Oh, I thought I was up. Okay, whatever. I wanted to get blue on there. I haven't had blue on there all day. It's just a psychological thing for me. Why am I still? Well, you should not have got out because of price point. I need to have this over being right. That's, again, to each its own on what game you play.
It was a good spot. There was a good vision there.
Yeah, I've been wrong. I mean, like on a bigger time frame trade, I still like this a lot. Mm-hmm. But I'm not going to hold another trade that goes into the money, even though it's and then takes you out. Yeah, even though it's a great short right now. Right now, I feel my window of opportunity starting to close, and I am not thousands in the hole, which I think I could have been.
If you were trading size, you might have been.
I might have been, yeah. And then I would have had to slow down and size down because I got to my loss limit. That's the scary part of this business, is going from big size to trading low size because you're getting close to your loss limit. And then you go, well, my loss limit's too tight. No, it's not. Your entries are too soon. Your size is too big. I mean, look back at your trading and you could have built yourself a cushion if done properly, or at least not be deep in the hole and be scratched. That was such a great thing. I'm so out of tune right now.
All right. Well, that's when you got to take steps back and reevaluate. When you can honestly say that to yourself as a trader, you need to take a time out. Take a time out. Let's take a time out here. We've got our top 5 funded P&Ls. Jack, you got that? Oh, you've got it already. Let's take a look and see what we got here right now. Top 5 funded profit loss. We've got Kyle K in the express funded account. Total profit $50,580. Wow. That deserves a wow. Ready?
Wow.
Yes. Hughes has been here before. Funded live $39,812. Wow. Emanuele, express funded account $31,287. Michael T, that wasn't say Michael P.
I'd take a $28,541 profit.
Nice. $28,541. Wow. And Paul Molitor is back on the list. Paul M, express funded account $24,804. So that's our today top 5 funded P&L.
Yeah, this is not. This is not today's P&L. This is total. Yeah,
total.
These are the top players. Total does not factor in what they've taken as far as payouts and things like that. So there you go. When you guys look at this, you're like, for $50,000, I thought he'd have a million in there. No, traders they build up accounts, they take profits, they build up accounts, they take profits, and that's where those are monster cushions right there. You can go on a mad cold streak, even with 30,000 hitting loss limits every day, which I would not recommend, and I don't think these type of traders are those type of traders. You can do that 10 times, 10 losing days in a row, and still be pretty good with a couple of those folks. So,
yeah, and MP. I'm not a fiduciary, but if you did have $1 million in an account somewhere, you should not.
Mm-hmm. Right. Yeah, you get buying power in the futures business, so there's zero reason, unless you like it because it looks good, to have that big of balance. It's just take the money. That's what we get paid to do. You're not an investor where you're just like belly upon. I got compounding interest. This is great. Then that's investing. This is active trading. Jack, was that my voice again for the big?
Yeah, you're back to the guys like I flexed bottles of goose all weekend. Now it's time to trade size.
Which way is the beach?
I don't got time to bleed.
We're seeing a lot of the same names on that list. It means these guys are, looks like they're relatively consistently adding to those profits. It's great to see.
Uh-huh.
Here we are again.
So, who was Ghost? You took a nice short up there. I saw you were short 61s. I got short 60s. I saw somebody else was short 51s. And you guys are all in the money. I don't think you guys had to take that much heat more than like Ghost. You took like really nothing. The 51s took about 15 handles tops heat. But I mean, there was a great short up there. You also had the settlement up there. You had settlement up there. And the market likes to return and test settlement, which it just did. Now, is it going to continue to the downside, or is it going to give everybody a head fake to the downside and pull itself back into a range? I'd still say it's at the low of the range.
You get the Dow making new regular trading hour session lows right now.
Who's moving it? Anybody out there in the chat world know who's moving the Dow?
Let's see.
I'm not sure here. New lows here on our crude. Crude tagging some 80 below the 90 level, 89.31 last crude.
Yeah, I am what I am. I absolutely love daily loss limits. Reason why is because it's my shut off switch. If I didn't have it, if you didn't have it, yeah, a lot of other funding companies don't have it. You're like, oh, I'm going to go over there. Well, go over there because like you're going to find your max loss limit in a day. So like at least we try to slow you down, just deactivate you for the day. And my God, you see a lot of traders that get deactivated for the day if they hit their loss limit, and they come back the next day with the opportunity that they can actually make up that they're not trying to chase money, but it's much easier to have a loss limit set, get deactivated because you hit it. Or if you get hit it, you get deactivated, and then come to live to fight another day.
That's just it. I mean, you've got to have some sort of limit. We tell you, live to trade another day. And a lot of traders, they ask themselves, how much can I make today? Well, I've got to say again, the question you need to ask is how much can I afford to lose today? Yeah. I mean, the money will come. The winners will come. It's that you got to recognize those losers.
And we used to have it a rule. It's not a rule anymore. It's a target. You're like, well, it's still a rule. No, it's not. You can't bust it up. You can't bust out on it, and then you don't have to reset your account. Resetting your account always is one of those things that we now have moved to just burying your account. You there's something really wrong with your trading. But we got to a point where we're like, okay, daily loss limits are there to protect. They're there to give traders. Well, actually, we wanted to always get traders just to stay away from it, and now we are seeing traders respect it. But we'll see traders just let it go to hit it, and then use it as a deactivate themselves, which is fine. It's your stop for the day, and then you live to trade another day because your account is still qualified to continue moving forward to get to the funded level or to stay at the funded level. So these are really good things that as Topstep's evolved, we're still seeing it help traders, even if you remove it from such a hard rule.
And Michael, the reason we call mixed segment shoulder tap is that professional prop firms, in my experience, you better believe that they have a daily loss limit on you.
Yes, they do. And they'll give you a shoulder tap. No, they're not giving you a shoulder tap and say, pack it up, Skippy, you're done. They usually do that if you bury the account. Sometimes when you bury an account, they'll give you another shot kind of deal. But, yeah, I know they did a reset. Andre did it, I think, one time. One of the prop guys I know, they went through a cold streak and they busted out, and they get a lot more buying power, I guess, than Topstep does, because Topstep's looking for traders that can trade within this range. If we had as much as room as some of these big prop firms give their traders, you're taking huge risks. And you still haven't seen that trader because you're not getting them in the office. You don't see their work ethic. You don't see it. So there's a different risk level that you have to be comfortable when you're backing traders that you never see, ever. Never meet, ever. In different countries or stuff like that.
Well, speaking of traders that we're going to meet today, 11 o'clock Central, our power player is Giannino. is going to be with us, and I'm going to be interviewing Matt. And one of the cool things, a lot of us can sort of relate to what he is. He lives in Colorado. He's been trading here for a long time. He's a YouTuber. Okay. Market Moves. And he's got over 7 million views, 10,000 students taught in private groups. He's been trading for 10 years. He's going to be with us here, and we're going to ask him some questions about trading. And hopefully you've got your pencils and pens ready to go to take notes. And then right after that, we've got our group coaching with Mr. Hoagland. Is that correct, Johnny?
That is correct. Yeah, from noon to 1 o'clock, group coaching. I've got a couple of emailed in questions already. If you have a specific question you want addressed, for sure, email it to groupcoaching@topstep.com, and we'll look forward to diving in and seeing what we can learn.
Cool. So I'm looking forward to giving Matt a call, hooking up with Matt for our 11 o'clock. So remember, we're doing Central Time. So if you are somewhere else on this beautiful planet, we go by Central Time. And right now it is 10:01 Central Time. So if you want to adjust your clocks or do something, cuss us out, whatever you need to do, please do so.
Hey, Mr. King 42, Mountain Man. Yeah, that I want to know where he's at. That was a good trader, and he was around when Topstep first started. I mean, like 2011, 2012. We started in 2010, January 2010, as just a prop firm. And we would have job postings at universities looking for students that could manage risk.
Mountain Man, yeah. You know, the thing is, the last time I talked to Mountain Man, I think we brought him in when I was broadcasting on the floor. Mm-hmm. He had been funded, and he took that money to open up his own account, and I think he flourished. I think he did really good moving on that way, and we love to see that. I mean, by all means, you know, just make sure you get real big and famous. You come back and say hello to us.
100%, yeah. That's the whole goal of Topstep, was to just put you in a better position. And when you get in that better position, of course, our prop firm's like, hey, Eddie, come on. And you can easily be like, hey, thanks, guys. I'm ready to go trade in my personal brokerage account. Topstep's also the trading combine. We wanted to make it so people respected risk and kind of pre-qualified themselves to trade their own account. Like if you can't get funded or if you can't pass a trading combine, in my experience, I don't think you have any business trading a personal account quite yet. Not to say in a bad way, but just in a way that, do you really feel confident that you're going to build that account up? It is real money. Is it your kid's college fund? Is it all like for $50? You can test out your skills in a market that if you actually meet the objective, you'll get a funding offer. Mm-hmm. Topstep. And if you don't meet the objective, $50 to reset. I guarantee you, like you're going to have more than $100 in your account. And I don't think you should reset more than if you're struggling more than a couple times a month. I swear to God, because it's just like, when you're struggling, you're going to bury accounts. Just it's outright. When you have no experience, when you have no trading plan that's proven itself, if you've traded on tilt. Speaking of tilt, 65% short right now of the sisters. Then you're going to find the bottom of that account. Why? I would much rather find a bottom of account of a Topstep account than of my personal brokerage. And I know that because I lost three $30,000 real money trading accounts over the course of like 3 years. And then spent like $6,000 on education. So it's like $96,000 of baptism by fire or whatever. So it's just like, right. I don't know. There's your risk reward play out of the gate right there. Not to go on a soapbox stance, but there's your risk reward. If you can't look at that risk reward and be like, I can be patient, I can trade on it, but I'm missing all this, blah blah blah. That's okay. That's okay. At least you're not losing. And hopefully you're looking at it as a point where I just need to be a scratch trader. If you prove yourself to be a scratch trader, I would then say, maybe I would then jump on my personal brokerage account, but still show yourself you have the patience, get funded at Topstep, and do both. Do both.
Right.
I don't like to spread myself thin, but if you're really that adamant,
You got to remember too, the door's always open. We're always here. We've had a lot of traders that have moved on and come back again and say, "Hey, I'm back for some more."
Yeah.
So doors always open here at Topstep.
combines are a low cost way to get information about yourself as a trader. Now, when you have like 20 different, 100 different accounts and all that, I think you're selling scratch cards. So like manage an account, show you can manage the account, and then kind of like expand from that. But don't treat it like you're buying your way into anything of like, I'm just going to keep. No. And we actually send emails. If you reset too much, which we do, we get people that reset way too much.
We call people.
We call them. We tell them to slow down. I don't know what any other prop firm does that, because you're like, oh, well, you're getting revenue from that. Well, sure, but we have costs and we have all that kind of stuff. But we don't want your revenue that if you're trading on tilt. We want you to trade better, and that's kind of like our philosophy has always been that way.
Well, speaking of doors that are open, we've got the meter running here. We're going to be bringing in Andre for Shop Talk. We're going to just take a few seconds here, and we'll have our intern go get him from the green room. Be right back.
Anjay.
Wow. You start off with that? That's my Polish name.
That's
My
his
mom calls me that.
His mom called him Anjay.
Michael somehow knows that. You were sitting on that one all morning, weren't you?
I know. I just saw you, and it just came to my mind. And it's the beginning of the week.
Yes,
I wanted
it
to
is.
put a smile on your face because I know how much you love your mom.
Yep.
Mikey Mezer, I got the call, email. I guess that you're talking about trading or resetting too much. You got the call or the email. Okay, cool. Checked myself. Cool. And
Good.
then passed right after. That's the reason why we're doing this. Now you could be a different company and keep selling flash sales and also selling as many accounts as you can get. There's a lot of companies that do. I'm not naming one only, but who's calling you? I don't know. Do those companies call you? I don't know. You guys can let us know.
Yeah. And on top of that, how many other companies are doing this? Like, you guys were talking about the shoulder tap segment about 5 minutes ago. Like, who else is doing that? Who else is coming up and giving you a tap on the shoulder and say, hey, you might need to step away?
Yeah.
I know from my prop firm experience, our risk manager would literally come out onto the trading floor, and if your back was to him, you'd get a little tap on your shoulder, like, hey, you're having a rough day. You might want to step away. You might want to call it a day. Come back tomorrow. You still have money in the account, but just looks like you're not doing with the market. And the prop firm, when we were market makers, so they got paid on commissions too. So they were incentivized to see us trade more volume.
Yeah, they
but, hey,
were.
At the end of the day, they still have a risk manager come up to you, and you literally get a tap on the shoulder saying, hey, today's not your day. We'll see you tomorrow. Go enjoy the rest of the afternoon if you could. But yeah, come back tomorrow and we'll get back at this. So, I mean,
Yeah, you're right. They made a ton of money off their traders because they were market makers and they got rebates from the CME.
Correct.
And you could easily be like the founder of that firm and be like, no, don't go give them a tab.
keep trading.
Let them keep trading. But the longevity game, if you help traders develop, there's a better game there than there is the quick revenue. So it's just something that you got to know the difference between people that actually care about you getting better and ones that are just giving you the candy and the crack or whatever.
Chop shop
type of deal. So
What other company does what Topstep does? I mean, you get the shoulder tap, you get the email if you're resetting too much. You've got coaching, you've got traders coming in and talking on power players. You got TopstepTV keeping you company, and hopefully making sure we're all learning something at the same time. Look at this move in the NASDAQ.
I was just going to say, look at this movement in the
Something
NASDAQ.
just popped.
Yeah, it just popped off the lows. I'm up $30 right now, John. Did I tell you?
Hell yeah.
That's, hey, you know what? That's anything above zero is anything zero and above is good, right?
I'm keeping this close to me because Anjay, I've been wrong all day.
Yeah.
I've been wrong all day.
We've got we had the range extension in the Dow that just absolutely found buyers down there and completely rejected. You got excess on the low in the NASDAQ. You got excess on the low and a weak high in the S&Ps. There's a change. I'm not selling this anymore until we get to higher levels.
Yep. Volume's confirming this too. We just on that pop, something came in.
Let's see here.
Nice catch, Johnny.
S&P came out. They're expecting one more Fed rate hike this tightening cycle. U.S. growth to slow to 1.3% in 2024, 1.4% in 2025. That's good. That might incite some relaxing of interest rates. Now, S&P now expects the U.S. economy to expand to 2.3%. Before it said it saw 1.7%.
So these revisions,
the market bad for rates, maybe, but these are all just came out here at 8 minutes after 10 and 9 minutes after 10. That's about when the top started, right?
Yes, sir. I think you nailed it, Johnny. I think we have GDP this Thursday, so maybe they're revising their expectations going into this Thursday, and the wires caught it.
Hey, you got the 50 and the Hondo right above here, simple moving average, and then the high from 1, 2, 3 bars back.
That's the regular trading hour high.
Yep.
So we still got to break out of this range, Johnny, to get long.
Well, I mean, in the S&Ps, this is not a very strong high. Our good friend Fred Decker pointed that out to us. There's no excess up here.
Gotcha.
It's all excess down below here. So if a period holds, there's the potential for the market to offer us higher pricing for shorts if we take out those highs.
Yeah. So keep in mind, this is the last trading week of the month. So I know my trading days, we get paid monthly. So, this last week you'd be cognizant of your account and account management. Obviously, if there's a good trade, you take it because that's what matters. You trade as if you're flat. But you view every trade independent of one another. But keep in mind, this is the last week of the month.
And quarter.
That's true. Damn, we're coming into Q4? That's wild. Wow. Where'd this year go? So keep that in mind. Equities looking to go negative for back-to-back months. So we might be sensing a little bit of a trend here. Long-term, though, investment-wise, it's probably good prices to buy. If you think about it.
Well, we were talking this morning on the opening call, Andre, about, I've been reading a lot of articles and hearing a lot of other speculators thinking that the longer time frame has not been very active at these levels. They've been kind of looking for a pullback of the 10 to 15% magnitude to start buying stocks again, to start buying, and they're a little underinvested up here. They're looking for the market to come back to them to get in, and are they going to succeed in that? I don't know. There's a lot of uncertainty out there, but this little pop here,
here we go,
change things a little bit in the daytime frame, at least for now. For me, we got to see how this plays out a little bit, but
sure.
So we just kind of keep drifting lower, looking for the longer time frame to engage.
Yeah. Well, I imagine a lot of them have their capital parked in cash right now that you're getting a pretty solid yield on. So there's no rush to get into equities just yet for the long term. But eventually that time will come. We'll rotate out of cash into stocks, as we always do.
John, do you like it right now from the long side or the short side?
Hey, what's tilt, Patak?
It's 62% long, 64% long cool. NASDAQ ES, 70% long gold.
Interesting. Okay. Let's keep an eye on this.
It hasn't really been too heavy except for right out of the gate in the morning, and those longs got paid. It was like 80%, and then we did rally up. Now we did then sell off big right after that, but you would have caught a 30-40 handle rally easily. And when I was quoting 80% longs,
right?
But if you're like an individual that stayed hard long and wanted this huge move, then I bet you got. I'm as though you would not have taken that profit.
So, I mean, what we were talking about, if we were just to look at the day time frame NASDAQ profile, right now, neither end of the initial balance has been extended, which kind of puts us into a range-bound hue in the day time frame.
Mm-hmm.
So, if you're looking for shorts up against our regular trading hour session high, that's what you would do if you were expecting the market to remain range-bound. So our regular trading hour session high is 896.50.
96.50. Okay, cool.
21 handle, Dave. If you had 35 handles in your profit and it went straight up to your stop, I've felt that before, and those are like trying to let a runner run.
Mm-hmm.
I wouldn't do that with a one lot, but if I had like a 4 or 5 whatever lot on, I would peel it off. But if you're called 21 handle Dave and you had 35 handles into it,
no, it's 35 handle.
Yeah, why not 35 handle, Dave?
Hell, one day he'll be 50.
Or stick with 21 handles, and you would add a profit on that. But no, it's just I'm just having fun with you. But that's still a great trade to be in. And sounds like you were looking for more. I don't know how much more you were looking for. But yeah, it sucks to getting stopped out when you're in the money. It's like.
Yep.
Here's the S&Ps are right at the regular trading hour session high right now.
Yes, we are.
Putting in another kind of weak high here.
I do like it from the short side somewhere up here. 50 and 100 period moving average is 04s, 08s.
Yeah, in the NASDAQ, Michael, I mean, if we're probably going to see a few piles of stops above the regular trading hour session high that could put us right up against those levels that you're looking at.
We're going to test these. We're going to test these levels.
It looks like it. There's a big
Here we go.
Yeah, there goes the S&Ps. Yep. Here's the NASDAQ. There we go.
That was your stop run. Just so
that was a stop. Good call, Patak. That's exactly 100%. What it looks like.
Now watch the dome, Michael. If the dome dies up here, nobody cares. It's more likely to fail on this extension than to continue. But you got to watch the dome. You got to watch volume. It's very subjective to do that. I get that, but you got to watch.
Hey, John, what exactly are you looking at the dome when you're looking for a stop run? What exactly are you looking for? Volume to thin out or just?
Well, here's I'll put up the NASDAQ dome. I'm not the best at reading the NASDAQ dome, but when we hit those stops, there was a big brrr, it just kind of runs up. And then if the dome just kind of slows down or even looks like it stops, it's like, okay, now what? What do we do now? Does anybody even care that price is up here? And if they don't, you're usually going to just have buyers back off. Sellers will take over and move price lower. So again, looking at the current price action on this dome, which I don't look at I don't really look at this dome. I have another platform that I look at, but what is it saying? Does it look robust to you, Michael? Does this look like an active? There we go. Now we're seeing more
I like
continuation to the upside.
There's a big. Okay.
Damn, the one's confirmed now. Shit.
Okay, it's pushing and it's up against moving averages. The 20s, 24s. There's a little volume spike back there.
The fuck
on my chart. That would be a pretty good extension.
So here's what I'm looking at. We talked about the value area special situation play.
Yeah.
There's value low in TPO charts. A period didn't really show any signs of acceptance. We're back up inside value, right? If we do show signs of acceptance in value, the target is to the upper extreme of value at some point during the trading day today.
Oh, okay.
So when we had that move off the bottom, and I said, I'm done selling, I think, for now. I think this market is going to offer us a much better trade location for shorts.
Yes,
this was what I was talking about. Yeah. We've got the afternoon pullback high, and the NASDAQ was up at 978. We talked about that earlier. And TPO value high is up at 991. Volume takes us all the way up to 15,000.
Yeah, on the S&P 5-minute, volume's increasing in every bar on this rally. Just a heads up.
So let's take a look at the 5-minute on the NASDAQ and see what that looks like.
On the NASDAQ, take a look.
John, I got long 06s just right there.
Let's catch it, Mike. Let's go, Patak. Let's catch this shit.
Yeah, I know. Yeah, I like the entry, but
Gotta be nimble. Gotta be nimble. It's not gonna run forever.
I mean, you got 10.
No, I think that there's, by the end of the day, I think that there's a lot more upside to this market.
I agree.
I mean, it definitely feels that way.
Test
But
40.
you were just talking about if it slows down in the dome. It hasn't slowed down really in the dome.
Mm-hmm.
Has it? No, I'm telling you, volume's increasing.
It is. Volume is increasing.
Yeah,
So there's conviction in this move.
I need breaks 74s.
I mean, it's initiative buying. It's
Yeah, so we got 13s trading. It's staying fairly strong.
Where are you long from, MP?
06, 75, 14, 9, 06, 75. Right down here. You see the blue thing?
All right, keep an eye. If you got traders out there, if you happen to miss this move, don't let the FOMO get to you.
Yeah.
There'll be another move. We don't need to chase.
106. Why do I have a stop there? I should.
a lot of stop volume there.
Yeah. Damn, I cannot trade it. Hit my combine 50%. Okay.
So, all right, Michael.
Yeah.
Yeah, you're starting to build volume up here, as Andre was saying, right? So this volume up here, low volume node. Well, shit. This is the S&Ps. I'm sorry. Hang on. NASDAQ. So again, building volume. This low volume node is right on the breakout point of the initial balance. So 97. 897. I mean, you really don't want price to go back down below that level.
97s? I know.
Agree.
I know. And the NASDAQ does these like exaggerated moves.
NASDAQ's wild. You got to hang on tight, baby.
Yeah, I don't like
As
this.
far as Delta's concerned, I mean, we're through Delta.
Ooh, we're trading today, boys.
Not really. I'm trading for scratch today, gentlemen. Ladies.
Always. Every day you trade for scratch. You'll be fine if you trade for a scratch.
Yeah. I'm not. I got myself out of the hole just barely, and then I'm slightly in the hole right now.
Here's that low volume node. We don't want. We want that to stay.
What level?
97.
If it goes to 97, I'm taking 10 handles of heat. If it goes to 92, I'm stopped. And there's exaggerated moves in these NASDAQ moves, and it's given anybody a lot of time to get long right about now.
Yes, it is. Yes, it is. I imagine it's going to be people are going to try to buy this pullback. I mean, me included.
What's the
Nothing. 50-50.
50-50?
50-50.
Interesting. Okay.
So it's given everybody and their grandma a chance to get long right here
Yes, it has.
on a pullback. And that's when I'm. I
know what you're thinking. I know. I feel what you're thinking.
But
Don't talk yourself out of it. If the reason stays,
yeah, the reason's still
valid.
It's still,
it's a good.
But the thing about it is there's been a couple ones that are still valid, and I've gotten out, and it's gone that way. So of course I got a little gun shyness in me.
It won't be the last. It won't be the first time or the last time.
No, it will not. Just make sure you manage that feeling. So your behaviors aren't trading in a way that you're feeding that feeling, which is going to deplete your account.
Volume at higher pricing. As long as we don't go back down below that low volume node, 97.
97s. Listen up, everyone. This is good stuff right here.
We're okay. Stay calm. Stay calm. How many do you have on, Michael?
Oh, dude, I just have one, John. I'm trying to get myself out of the hole, and then I'll size up.
Well, I'm just asking. There's nothing wrong with that.
Yeah, no. I'm kind of explaining to more than you, but if I would have because I was pretty cold this morning. I'd say I'm getting a little. I'm saying maybe I'm lukewarm right now.
5-minute bar is about to close here in 1 minute.
I like it when it does these little pop runners.
Yeah, that was definitely a stop run. About 5 minutes.
To get us up here.
Sure. Yeah, I hope everyone saw that. And if you didn't, go back once we post this YouTube. You'll see exactly what Michael and John were talking about. You can see it in the chart. The stop run. It happened around 10:20 Chicago time, 10:20 Central time. Go back and watch film, just like the pro athletes do. Go back and watch film.
Yeah, watch film. Thanks, Andre. Yeah. Watch film like any athlete would do. There's 10 hands. So that only moved 10 handles to I'm not playing this game anymore.
You out?
Yeah, I'm out. It only moved 10 handles. If it goes down to 90 somethings, I'm gonna get long again. But I don't like this dancing.
Yep, you want it to run. A lot of these people are probably calling tops or shorts are coming in. I don't know. John probably sees it better than I do, but the selling volume has been significantly less than the buying volume from the last 15, 20 minutes.
Yeah, as long as we stay
See
above.
this 50 lot right here? Oh,
50?
Above 97.
yeah, 50 lot on the NASDAQ.
What
That's
price?
08 half, 08 half. No, it's there. You just can't see the ladder. You'll see it. I always like, because these are bigger size on the NASDAQ.
You read ladders really well. I need to improve on that. I'm more of a chart trader. I got to learn how to read the ladders better. I've been doing this for so long.
I've been reading ladders for 20 years.
See, I have. I used to trade horizontal markets, then I just went over these vertical markets. I'm still learning. But yeah, I can see the ladders. The way you read the price action is pretty damn good.
I mean, when I'm in rhythm, yeah.
Yeah, when you're in flow, right?
When I'm in flow.
Just wanted to give a heads up here, guys. Danielle informed me that in an email that went out about this, that we're supposed to give away 10 50K trading combines each day this week.
Ooh.
So yeah. So
wow.
we'll I'll get the emails by just sign up for Top Quiz, and I will do the drawings during power players and during group coaching, 5 each.
Cool.
Wow.
That's
Free
a lot.
stuff.
Yeah.
The gift that keeps on giving.
There you go. Top quiz. Woo woo.
Are you flat now?
No, I got back in long.
Yes, sir.
Where did you get long
yeah,
from?
You did.
11 quarter, 9. I had 11 quarter.
So it just cost you in trade location, just because
It did cost me in trade location. I will take a punishment if I get, but it's staying fairly strong.
It is. Building legs, as you'd like to say.
Building legs a bit. If I was short right now, I'd be like a little nervous.
Agree.
But at the same time, here's where I was long right here. So the kind of the nerve-wracking part of this is when you then get out of your great entry, which I would have taken really little amount of heat on. And then you go to get in a move that's kind of already pushed a little higher.
So here's the extension in the NASDAQ. TPO value low from Friday. Volume value low from Friday. Stopped right at it.
I'll be damned.
Striker, you're short 912s. I'm long 911s. So I'm liking your position better than mine.
If we take out the high here, that puts us into volume value, and then I think it's more of a potential acceptance of higher pricing in the day time frame.
Yeah, right. All right, gave everybody a chance to get long
and short. You can get
the shorts are a little bit harder to put on, in my opinion, but it looks like it's getting paid. You got Striker, you got 12 handles in it.
Nice.
Here's my stop coming down here at the 96s, right where we said it was going to. It was going to
back into the low volume area here.
Yep.
97.
Yeah. Night long is short. No, I'm at 94 buy. Okay, you're long 14s. All right, here's my stop out. Boom, just got stopped out. Horrible entry, Michael. Jesus. Sorry.
Don't be trying to.
Geesh.
Hey, Patak, you said, are you a market maker or a market taker when you make your trades? And what I mean by that, do you work bids to get long, or are you?
Yeah. A lot of times.
Well, you'll work a bid.
I'll work a bid, but the Nasdaq are these little rips that I kind of like wait for it to rip, and then I'll jump in.
Yep.
Because a lot of times if you're working bids or working off, it's just like rips right through your stuff unless you cover it up. I agree. Right? Yeah, so I look for these stop runs, 95s, 94s. Striker, where are you covering yours? You got 20 handles into it right now. Nice trade.
Wow, look at these things. All right, boys. Well, I'm going to let you continue this trade. I'm going to get back in here, too. That was fun. I had other stuff to talk about. We can touch on it tomorrow. But
cool.
Right now, we got trading, and that's first and foremost here at TopstepTV. So let's keep trading. Keep an eye on these moves. How hard are you guys tomorrow?
Okay, cool. We'll see you.
Awesome, Andre. Thank you.
Later, guys.
All right. So, NASDAQ has kind of closed out those single TPOs. They're still low volume here at 97, right here, that area we were looking at. We just filled in a little bit of it, but the S&Ps have not closed out those single TPOs. We're still building volume on that range extension in the S&Ps. I guess it depends on who's going to win, right?
Yeah. And we got, it's still 50-50 in the NASDAQ and in the S&P.
Right.
Well, the only tilt we had today that was big, everybody, was right out of the gate.
Longs.
80% longs. Yeah. Now, they did get paid unless you sat on that long. Then you would have taken heat on it.
Well, you know what we got coming up here next, Michael? We got the shoulder tap. I'm wondering if our risk manager, Mick, is going to be tapping you on the shoulder. I don't think so. You're not there yet, but
no, I'm down 500 now, 485. Yes.
For a guy like you,
I like to get cushions, and then I would have so loved a cushion this morning when I had it, but I didn't take it. I didn't cover it. I would have had a cushion out of the gate. My mindset would have been a little bit more,
better.
A little bit better. Yeah.
All right. Well, let's take a few minutes and we'll get our risk manager Mick in here and see what he's got to say.
Let's do it.
Welcome, Mick. It's good to see you.
Good morning, gentlemen.
You had a really fun weekend.
Had a nice weekend. Good to see you guys. How's it going this Monday?
It's going. It's a difficult day for myself, but I know you're going to talk about a great day for others, and probably a difficult day for others. But mine is, I just probably bad win percentage. Probably, I don't know. I'd say 40%, if that.
Yeah,
then,
you're battling. It's not awful. Just grinding it out. I've seen you, go down, go back to break even, down a little bit right now. But you're trading well within your boundaries. So
well within my boundaries. Yeah, I'm not going to walk away
something.
Yeah, I'm not going to walk away from today upset or feeling too down on myself, which is not a good place to be. As you know, we shouldn't be the first people that start getting down on ourselves. Like it doesn't help.
No, it doesn't.
It's been a choppy trade this morning, and if you're framing out your trades, even if you've got negative results, you can't get too emotional about it. Being down is a little bit part of the business. So don't worry about it, Michael. It's early in the week.
Thanks, buddy. I told you guys we get good positivity here. We'll call up traders and say the same thing. We'll call up traders and say pump the brakes, you're resetting too much. We'll call up traders and say you took a bad day and you flipped it. What happened? And we just talk to them about it. And then Mick's gonna probably talk to us about out of the gate which ones good traders that are trading well or ones that we're going to learn from.
Well, it's been a pretty quiet day, and we've got a lot of red on the boards today, meaning our traders, there's a lot more losing than there is winning, which, considering most of our traders are trading the NASDAQ, that's why we're seeing more red on the board, because I think it's choppy. So a lot of people in the same position that you're in, Michael, this morning, a little bit up, a little bit down, but overall mostly down.
Okay. I don't feel misery loves company, Mick. I don't feel so bad.
Yeah, sure. I mean, it does make you feel a little bit better to, know you're not the only person. I've got a lot of stuff to share today. I have some things I want to talk about that happened last Friday, some really good stuff from last Friday. I have a story that I want to follow up with this group on. For the last couple of weeks, we've been talking about one of our traders, spoke about him earlier last week. Want to talk to you about how his week ended up. But before I get into the details, I've got a couple of traders I want to feature. We'll pull up some trading cards, but just a couple shout outs this morning. We've got some people up pretty good. Got Sean C., who's in a live account, up $7,400 today. One of his first few trading days. This is someone we transferred from XFA to live last week.
Mick, this is Sean C. that was in here. Is he still trading?
Yeah, Sean was trading. Well, was trading.
Still trading in the last hour.
No, I think he's been sleeping because he started 5 p.m. Central Time last night, and he was trading all through the night. So,
guys, Mick knows when you're sleeping. That's what I mean. That just goes to show, and I'm going to tell you guys over again. We care about traders, and we're going to call them and say, "Hey, great trading. Keep it in your pocket." Not always. We're not going to annoy you, but this is Sean C. who was on here earlier and said, "I'm up 7,000," and live trader. That was he wasn't the one on the win streak, but. Yeah, no, it's good to hear that he's up 7,400 now and he's sleeping.
Yeah, he might have just been a little modest in rounding to a big round number, but up $7,400 trading the NASDAQ starting last night until about 9 o'clock this morning. Michael S., who's in an XFA, Express Funded account, up $4,500 trading the NASDAQ. And then Juan Bing, who's in an Express Funded account, an XFA I call them. I like the acronym for short. He was up just over 9,900, and then right before I came on, I took a peek at him. He's back in the market, up $10,400 trading the NASDAQ today. So awesome stuff there. Oh yeah, by the way, Sean, who I mentioned first here, with him being up $7,400 today, brought his live account balance up to about $34,000. So that's exciting. Definitely got a big account. And with that, I want to go back to Friday. Friday afternoon, we had some nice movement in the markets, and some of our traders, these are all in live accounts. I'm going to talk about 3 guys. I'm calling them my 3 musketeers or my 3 amigos. We had some massive P&Ls from these 3 traders to the tune of $70,000 between the 3 of them in profits, all trading the NASDAQ. Huge shout out to Hugh from France. You've heard his name if you've been watching.
Oh, is this Palermo? He's from Palermo?
No, that is
that's Italy, yes.
That's Emanuele from Palermo, Italy. Hugh's from France, made almost $30,000. Yes, on Friday afternoon, up $29,870. He was our top dog for the day there. Followed not far behind by Samuel G, up $22,792 in his live account. And then Lavani, who we've talked about, Lavani G was up $19,852 trading the NASDAQ. So
in what account?
Live account, all live accounts.
Oh, these are all live. Oh, so everybody, when we talk about pulling up traders that are trading really well, we're getting better and better and better at that. And if you're getting a call from us to be pulled up, it's pro ball type play, and I love seeing these traders that get called up continue trading well. That's one of the reasons why Mick and his team look at all the data, look at all the stuff, and say, Sean C, he's ready. Emmanuel, ready. And that's the exciting part, how we manage our risk on the prop firm. Instead of putting everybody on there, we XFAs really help us all learn through their data. I'll share their data on the tilt. That data is really valuable. So we are willing to pay you a portion of your profits as you provide us, and you're more qualified than the combine folks because you're on an XFA trading well. But then there's the ones that start pulling up some magic. When I say magic, like good skills, and that's when we put them on a live account, and that's where they're trading real capital with the prop firm.
Yeah, and everybody here at TopStep wants to see our traders doing well. For us on the risk team, we're happy with people passing trading combines, doing well in their express funded accounts, taking payouts from their express funded accounts. But since we're in control of who we call up from an express funded account and put into a live account, we're extra excited when we see those traders that we move to a live account putting up $70,000 afternoons like we saw on Friday. So that was cool. We had a little bit of a party in here in the office after the close on Friday.
Nice.
Yeah. So with that, that's some exciting news. I told you earlier when I hopped on, I wanted to talk about a trader that we were speaking about last week, Brandon, and he's in a live account. Last week on Monday, we talked about him because he had started off his day when I came in. He'd been overnight trading. He was up 4,500 in his account. Then he found himself up 10,000 in his account. And I think by the time I came in on Monday for the shoulder tap segment, Brandon went from being up 10,000 to down $3,000 on the day.
I remember that.
Big swing during the day.
Yeah.
It's kind of a sad story with him the rest of the week. He proceeded to, Tuesday, Wednesday, and Thursday. He lost over about $3,000 every single one of those days. He took Friday off. He's not in the markets today, but this is something that I'm following up, not to knock Brandon, but again, a learning experience for our traders who are watching. We want to talk to you about good things. We want to talk to you about things to be conscious of and try to consider when you're in your own trading, because Brandon went from being up 10,000 on the week to down 10,000 on the week. It's a $20,000 swing in 4 trading days. And considering what he had in his account at the beginning of the week, which was a little over $12,000, he went up 10,000, so now he's up about 22,000 to finishing down 10,000. He was playing with a huge percentage of his account balance, because right now he's sitting in that live account with only about $2,900 in that account.
Ooh, yeah.
Yes.
That's hard. That's hard on the psyche. Again, we got to protect it like we're protecting our account, preserving capital, managing your emotions in a way that your emotions don't start running your behaviors. So that's
and again, not knocking Brandon. He's got a good eye for the markets. He's got a lot of area to improve on his money management stuff. But to have over 20,000 on Monday and then finish with just under 3,000, you're walking away at the end of 4 trading sessions with only about 10-15% of what you had at one point in the week. That's crushing. That's crushing. Yeah. I had a pit in my stomach, as I was watching that throughout the week.
Did you give him a call?
We talked. He's in a good headspace. He thinks he needs to take a little time off, which so far between Friday and today he did. I hope it's not too late. I know he can turn it around, but he put himself in a position where he doesn't have a lot of wiggle room, a lot of cushion, and it's going to be tough. I know psychologically he's shaken, and I would be too. But enough of that. I wanted to share, follow up. I'll keep you updated on what's going on with him. But in other news, I'd like to. Sorry, John. What'd you say?
So we're rooting for him.
Yeah, we're rooting for every one of our traders.
Hey, how about, are you rooting for me right now, Mick?
I'm rooting for you, Michael. I'm rooting for you. Where are you at? I don't want to turn around, but where are you at today right now? I saw you down 500.
While you were talking about 97s and sold 12s, I got a 2-lot on that one, and that was that brought me up. I was down 500 on the day. I'm up $75. That's a scratch day. I'm going to put a W up here because I'm pretty much done in general. Nice. And John, you know how hard I've been working on a W day, so I got it.
Nice.
Yeah, you're like, hey, you're only up $75. Yeah, I was down quite a bit for trading 1 lots and 2 lots. And 1 lot, I was down, not hitting it well. this is my last trade of the day because I wanted to get back to scratch. I'm going to go into tomorrow, just like Mick talked about. If you don't control your downside, you're going to go on the next day thinking about, as you shouldn't be thinking about, chasing your chasing your losses. And you really, if you have losses today and then tomorrow and they're big today, you can't get that off your mind. It's very, very hard. You can, but you can't, you should have a short memory sometimes when it comes to losses, but a long memory when it comes to lessons.
Yeah. So you're giving yourself a fresh start for tomorrow. You're up a little bit on the week. Michael, can you kind of walk us through what your mindset is on this? And if I may just kind of guess, because it's 10:45 a.m. Central Time, you're calling it a winning day, up 75. You've been down 500, back to break even, down 500, now back to break even. It's been a choppy market. Are you just kind of thinking like, hey, this isn't my trading day. This isn't my kind of movement I want to see in the markets. I'm going to just call it a day while I'm still whole.
Yeah, that's exactly what I'm doing. I look for base hits out of the gate in the morning to build myself a cushion, call it a $700 cushion or $1,000 cushion, and then I look to put my size on. So that's like I'm looking for base hits. Again, baseball analogy, like a little point. But I kept striking out, Mick. So last thing I wanted to do is really swing for a deeper ball, doubles or triples, so to speak. And sorry guys if you don't know baseball, but my point of story is like little trades, 200, 300, build those up, 2, 3, 4 of those, 2, 4, 6. Now you have 600 cushion, and you can put a little bit more size on to go. I didn't find myself in that position. I found myself in a position of consistently wrong. But then I kept putting myself back to zero, down, back to zero. And I'm going to end up $75. And my point with all this is my window of opportunity, I think what you're saying too, is closing. It's what you say, 11 o'clock, yeah, almost.
Mm-hmm. Almost quarter to.
Yeah, I'm not going to trade right after this because like it just gets a little bit harder for me. So if I'm already not seeing it, today's not a make good money day. Last week my Monday was a $2,200 day. This Monday is a $7,500 or $75. That'd be nice, like Sean did. $75 day. So
yeah, I'm happy you walked the viewers through that. That is a mature trading mindset. Tested the waters, found himself, down just a little bit, and was able to make it back. But knows that it's not his market and walking away. And I like that. The bulk of the volume for the day, 7 a.m. Central to 11 o'clock. We're coming up around that 11 o'clock time. New York's going to lunch. Chicago's going to be going to lunch. And if it's been choppy, maybe something moves towards the middle end of the day, but maybe not. And it's not your day, so you're saving your powder, keeping it dry.
Keeping the powder dry. Those that don't know, keeping the powder dry means you're ready to seize an opportunity, and you can't really seize an opportunity if you're A, really out of tune, or B, very close to your loss limit. So that's why I size down out of the gate. I want to keep my powder dry. I want to build a little bit of some W's in trades. That thing builds the cushion. That then I can then start to put a little bit more powder in the cannon and build those days up. But really proud of our live traders that are putting those days up. I never told you guys I was going to be the best trader here. Actually, I'm not going to be the best trader here. I'm just going to talk you through stuff like this. But Mick comes on here, he talks about our best traders, and that's what's so awesome to see. It's inspirational for me to see these folks trade well. So
excited to share those big days when I said, overall we're in the red today. But yeah, anyways, speaking of some good traders. Oh, and by the way, the good traders are never going to say they're great traders. They're just going to say, got a good eye for the markets. And with that, let's pull up a trading card for Kyle K, if we could, please.
All right.
Kyle K, one of our Chicago
he's out by me.
areas.
Is that where you're at, John?
Well, Lamont's like 5 miles west of me.
That's a beautiful little neighborhood.
It is. It is a great little town. We just had dinner there at the Rosebud in Lamont a week ago last Friday.
What's the movie? Rosebud.
Citizen Kane.
Citizen Kane.
Sounds like a nice date night.
Yeah.
So Kyle, like this stuff here, he got transferred to live last week. Actually, he had 2 of his express funded accounts get called up to live. So he's going to be starting in a live account with over $30,000 between those 2 accounts. He was trade copying in his XFA. So, anything he did in one was replicated in another. And good trading statistics, as you can see on this trading card. Average daily P&L, $3,700.
Very nice.
He was right 60% of the time on his trading days. He does swing for the fences with big size, but it's working for him, and that's why he's getting transferred and putting up big numbers. I say work a little bit on trade location, because if you're trading bigger size, the location is much more important than only putting a small position on and letting it kind of go against you. So I would like to see him work a little bit on the trade location, because on those days that it doesn't work out right off the bat when he puts the trade on, those losses come very quickly when you're slapping 10, 15 contracts on.
Oh, yes.
Just something for him to think about. Overall, really good performance, so I'm not going to harp on that trade location stuff, because we liked what we saw. We called him up to live for 2 of his express funded accounts. And for those of you that might not be familiar with this, you can have up to 3 express funded accounts with us here. So those are funded level accounts. You're trading in your XFA. And if we call you up, we might move multiple express funded accounts and transition and place you in a live account. So for Kyle here, we took the balance of each one of his express funded accounts and made that his starting balance for his live account. So he's starting with a big chunk of dough, and we look forward to watching him trade in the live. And hopefully I can share maybe my 3 amigos or my 3 musketeers that put up the 70 grand last week. He'll be joining that group, and we continue seeing large numbers at the end of the day.
They could be the 4 musketeers.
4 musketeers, yes.
And for those that don't know, we merged it into 1 live account. You're like, well, why do I want 3? You can't have 3 because brokerages don't allow that with a prop firm. I mean, they don't allow us to have multiple individual or 1 individual on multiple accounts, because they all get tagged 50s and they all get really registered. They're registered with the CME as trading through real orders. So anybody who says here's 20 accounts, you're at the funded level, they're not taking you live, because there's no way you can have 20 accounts on a live prop firm sub accounts. It's just something to think about. And when you're playing that level and get called up live, whether you have 1, 2, 3 accounts, you're playing at the Pro Bowl level. I mean, you're just trading really well, and you're a professional, and we deem you a professional. The CME deems you a professional as well. Mm-hmm. They call it professional when you're backed by any firm financially, then you're considered a professional. So,
and when you are professional, you don't need to spread out 2 contracts in this account, 2 in that account, 5 in this account, X, Y, and Z. Trade it all in the live account. If you're going to spread out, 25 contracts from 5 accounts somewhere else or wherever you're doing it, go put the 25 on here.
Yeah.
When you are in a live...
Forced user goes, what if you don't want to go live? Topstep, you go live here if you're crushing it. We don't keep you on a sim account. We don't care about your data at that point because we care about you being on a live account trading real capital. XFA is really understanding how you're managing risk. Your data is more valuable than everybody else's data in the trading combine. We're willing to pay our traders for their data. That's why you're getting compensated at that level. And that data also populates the tilt, which we'll eventually have for others to see. So that's kind of it.
So be that guy with Eddie out, but can we go to the next card real quick?
Yeah, please. Damien L. from Canada. This is someone who is still trading in their express funded account. We've got a close eye on him because we really like what we see. Average daily P&L, $604, 70% winning days. I'm rounding up there. You heard me talk about it last week and the week before. Holding times. I think Damien's holding times are awesome. He is not a short time trader. Michael, you asked me about that. What's, short holding times, long holding times? Mm-hmm. Damien's holding trades for multiple hours. He's got a bias for the day. He sticks to it, which I like. It takes discipline to stay in a trade and watch P&Ls go up and down, watch the market go up and down, and still stick to your convictions. So we're very confident that he's got a good head on his shoulders for the markets. He sticks to his guns. If you're holding trades for multiple hours, you're giving the market room to breathe. You don't have tight stops. You also are probably framing out the trade very well, where you're saying, hey, this is my risk on this trade. This is my risk on the day. If it gets to this point, I need to get out, whether that's a dollar value or you're looking at an area on the chart. But he's letting the market do its thing, and it's allowing him on his winning days to put up some nice, substantial winning days. Really like to see that he's trading the euro currency, too. There's not a lot of people trading the currencies out there. As a reminder, for those of you that might be in the Forex space, trading FX on Forex, the futures space also has foreign exchange products, and we have one central pool for all those. It's the CME exchange. So the professional participants are trading FX futures, not Forex. Topstep offers all of the main popular FX futures, good volume, good liquidity, buy it at the bid, sell it at the ask. There's no big spread in between if you're trading the pairs on Forex. So Damien's taken advantage of that, and he's been doing really well trading the euro currency on the futures exchange with us.
I want to get some questions answered real quick. So you're considered a professional trader when you go live? Yes. You're considered a professional trader anytime you have real capital backing you financially to trade. That's a CME. It's a registered exchange, and that's their rule as well. Do traders cash out of their express funded account, or do you move the balance over to funded level?
We move the balance. We remove their closing balance of their express funded account over to the live account.
And you encourage them to take a payout as well as you're moving, just to keep that confidence there and pay themselves, correct?
We absolutely do. And our traders, we have the payout policy of after 5 winning days of $200 or more, you can request a 50% payout of your account balance. You can get 50% when you transition from express funded to a live account as well. And during that transition, even if you haven't met your most recent 5 winning days of $200 or more, let's say you've taken a payout in your express funded, now you get called up, you've only had 2 trading days of $200 or more. In that transition phase, we make a little exception to that 5 winning day thing. So when you're transitioning, you can take 50% payout of that account balance.
And that's to keep a cushion in there, everybody. It's not like you can't have access to that. If you get to 30 trading days, you have 100, you can take that all out and say, peace, I'm out. Oh, I'm going to go open up my own brokerage account, or I got to buy, pay for my kids' college fund or whatever. That keeps you from coming up to the funded level and then taking all your profits out and going back to the sim level. We don't want that. You shouldn't want that. It's a little gamey of the fact that in the spirit of what we're doing, we want traders that trade well to keep continuing moving forward. So that's why you will go to a live account. You will not stay on an express account if you're crushing it. And then do we need to be registered with the CFTC? No, you're trading strictly proprietary capital, and it's strictly proprietary capital. We're not taking in any investor capital or any of that kind of stuff. Then you do not need to be registered. The firm does not need to be registered because you're trading strictly proprietary capital. So I think those are answering some of those. Can I have an XFA while you also have a live account, Mick? I don't know the answer to that one.
Yes, you can. You can have up to 3 express funded accounts while simultaneously having 1 live account. And if
you have 3 express accounts, do you get paid from all of them?
You can get any express funded account, whether you have 1 or 3, you can take payouts from it, while simultaneously also taking payouts from a live account. So to summarize, you can have 4 total funded level accounts, 3 of which are XFAs, 1 of which would be a live account. And like Michael said, brokerage and clearing will only allow proprietary accounts to have 1 live account.
So after
money laundering.
Yeah, Jack, I want to finish some of these questions too. After 30 days, can you withdraw daily?
Yes.
Okay. After 30 days, people, you can withdraw all of it. It's just not until if you're trying to cancel early, I think it's 50% max, right?
Correct.
I quit. Yeah, I quit 6 days into it. Yeah, you can take 50%. The rest is staying there. It's our way of also keeping you a cushion, but also incentivizing you to stay trading. Back in the day, we'd have people get funded and take 100% and then go right back to the combine and take 100. And it's not that's not in the spirit of why we created the program. And you're trading well. Quit trading in the combine if you're trading well. So that's really the incentive here. But you can, after 30 days, take all your money out.
You can, yes. And the scenario that, we would be okay seeing, or not, I shouldn't say okay, like if you're going to take a full payout because you've been trading really well after 30 winning days, and you're going to go open up your own account, trade your own personal account, all the best to you.
All the best.
That's fine. We want our traders just doing well and being successful. However, we do want good traders here. So we'd love to have you, but we understand that maybe there's some, Topstep is just one step on your, journey if you have a bigger picture. But yeah, we want to keep our good traders, and definitely as we're talking about being able to take 50% of your account, take 100% of your account, do ensure that you keep some money in your account to weather a rainy week, a rainy month. You want to have the cushion in there. You don't want to take too much of your money out to the point where if I have 5 losing days in a row, I've got no money left in the account. Plan ahead like that, because those times, I don't care who you are out there, you are going to have a cold streak. Hoag's had them, Michael's had them, I've had them, and you want to be able to survive a downtime in trading. Maybe it's you, maybe it's the markets, but it's going to happen. It happens to everybody. Not everybody is, hot forever.
Yep. And then Chris goes, were you affected by Deal's payout freezing? Yeah, we were. We've been only using Deal for 7 months. We've been around for 13 years. So we just went right back to the old process. Deal is an incredible process because they do know your customer, they do taxes, they do holding your contracts, they do signing your contracts digitally. So it wasn't all in one package, but we are working on a solution too that gets us back into that that type of handle a lot of your stuff, because we were doing that all on our end. We have a finance team that processes everything. So it hasn't really changed much on our end, except just made a little bit more difficult for us to get all your pieces of your information to pay you out, which Deal helped that out. So yeah, working on that one, we'll let you know.
I'm back to going into the banking portal and approving and sending out payouts, which we've had a few days in the last week or so where I'm sending out over $100,000 in payouts per day. Crazy.
Yeah, no, it's still great to see. So that's still cool. Explain the benefits of LLC versus individual. We'll get to that one at some point. That's more a matter of choice. We have a lot of people that put themselves in LLC and a lot of people that do individual. I don't know all the details of which one's better and why, but maybe at some point we talk about that one. So I just want to get some of these questions answered.
Yeah, but I would say talk to your tax professional, because it's not a one-size-fits-all answer. It might make sense for you, it might not make sense for somebody else, but yes, you can trade a live account under an LLC with us. Yeah.
So hopefully we answered a lot of you guys' questions. Continue to keep those coming. Not right now, because we are going in. We're late today, but we're getting great information today. Mick, thanks for coming on.
Thanks for having me, gentlemen. Enjoy the rest of your day.
Well, always good to see you, my friend.
What do we want to do here, guys? We're running pretty behind. We have Matt is waiting for power players. Do we do the quiz after that?
Yeah. Yep. That means folks, you either got to tune in after or highly recommend tune in now.
Well, here's the thing too. If you're already signed in, you'll still be entered to win the 5 combines then. And we'll do the quiz right after power players. Mm-hmm. All right.
Sure. Before group coaching, no problemo.
So we'll take a coffee break once you guys sign off right now, and I'll get Matt in here with Eddie.
All right. I'm signing out. John, it was good trading with you today. You kept me centered. You kept me from over trading.
Good.
I ended up the day light. This is a scratch day, which is scratch day is what, John?
A good day.
A good day. It's your second best winning day. That can happen. So there's a W on the board. those are last week before that. So chip. And tomorrow's a good opportunity. I'm going to go in with a not a mindset.
Jab.
Yeah. Jab. I know. I got a little tattoo. It's like jab. It just reminds me in life we all want uppercuts, but jab is a good way to chip away at life.
All right. Well, Michael, pleasure to be with you today, and thanks as always for being with us and entertaining us for the last 3 hours. We're looking forward to seeing what Matt has to say.
Yeah, and Rosales, what count size does MP use? I trade between 1 all the way up to 6 slots, and sometimes I'll put in more. But in on the prop firm, you don't need to have a bunch of buying power, you get a bunch of buying power. You don't need to have a balance because it's all cross collateralized. All that long story, but yeah, that's my quick answer. All right, we'll see you guys. Really appreciate it, John. Great trading with you, Jack.
Yeah,
you're awesome. And we'll be back in just a few seconds as soon as I get Matt in here.
Cool.
Time for a little coffee break. We'll see you later.
See you later.
Welcome back to Power Players. Yes, Power Players. And today we've got Matt Giannino going to be with us here. You can see him right. And he's got his Topstep. You got your Topstep hoodie on. That's cool. Good stuff.
Yeah. We're matching today.
Topstep looks like a mirrored image almost. Now you're the better looking guy. I'm sort of the cracked mirror, but very nice to have you here with us. We appreciate you stepping in the batter's box and taking some questions. Now, if you're not familiar with who Matt is, now here, check this out. Graduated mechanical engineer. Now that by itself is something very impressive. You ran professionally after college for 5 years. You live in the beautiful state of Colorado. Here's something: 7 million views on YouTube. 7 million views. You know, that is, I looked it up, that is like the whole country of Denmark. Okay, you've had more views than the people in Denmark. You could put that on your resume. But we've got a lot here. 10,000 students you taught in a private group. You've been trading for 10 years, and your main focus right now is options, selling options. But that's cool. So how are you today, my friend?
I'm doing good. Yeah, like I mentioned, I just had a trade hit this morning that just checked all the boxes, you know, went in with a lot of position, and it just played out perfectly. So it's a good Monday. Usually, you know, doesn't work out like that.
Right. Well, Mondays, I'm usually sitting on one hand. You know, you don't really like to trade Mondays, but you're starting the week off on the right foot, which is very good. And, you know, throughout our Topstep TV, a lot of the traders also starting Monday on the right foot. But, you know, I gave a little bio of what you're about. If you can, let's fill in the blanks. Tell us about yourself.
Yeah, I kind of like what you said, was an engineer, and in college worked a bunch of jobs, decided like that wasn't going to be something I ever did when I graduated. So internships, and, you know, just got pushed into like my passions. So I loved being an entrepreneur. I loved running, and that's kind of what I focused on after college for about 5 years. And, you know, running was amazing, but it led to some other things through just, you know, passion pursuit. So 5 years after that, 10 years after college, you know, it led me to create a business and be able to trade my own capital and, you know, live the life I want. So that's a short summary of kind of how I got here. And it's had a lot of tons of ups and downs, and it was fun. It was a lot of fun.
Well, as we go through some of these questions, and as you sort of open up a bit, maybe we'll learn a little bit more. Now, I mean, what led you to pursue this career in trading? Now, you were an engineer. I mean, that's a very good job to have. But what sort of got you by the hook and pulled you in?
Yeah, it was basically, you know, just struggling to figure out how to make an income where I didn't have to become an engineer, you know, when my running career dried up. So I was always looking to figure out like what's going to be that path for me. And first week in the market, I think I made $100 on a Tesla trade, like very first trade. And that was money that like would take me hours to make. And, you know, that hooks you for life sometimes, the first trade you make. So yeah, that got me going and led me to today, where I mostly sell options, and I'll swing long sometimes if it looks right, but I just love watching the markets every day.
Now, is there any certain market options that you like the best?
I love Tesla for selling. I mean, you can't go wrong selling Tesla options, but focusing on the index funds, just keep it simple. I mean, you could just do credit spreads with those, and, you know, intraday, you can do a lot of stuff. Yeah, I don't like to get too fancy. I just like to stick to the tickers I can follow and, you know the best.
Right. You know, the markets that you're dialed in, you know, if they keep working for you and they're your friends, you know, why veer off to another path? If it's working for you, stay with it. And it's great advice. How about up to date? How do you stay up to date with the market trends and the news? Do you follow the news?
The only thing I follow is the interest rate, because the news is almost like a trap. I feel like the news is always meant to sway the masses to make the wrong decision at the wrong time. So the institutions can grab liquidity. So like I've been talking about this for 2 months, how the media was going to spin off the government shutdown and sink the markets and bottom them out there. So I'm kind of playing into that theory right now by, buying into this dip when this media spinoff is happening. So I do not like the news at all. And I think if you just follow the interest rate, you'll have more success trading long-term direction.
Right. And we do have that government shutdown coming very soon, but usually they wait till the last hour and something happens, but we'll see. I mean, maybe not. Now, Matt, could you walk us through your typical trade day? You get out of bed, okay? What's the process you go through?
I wake up every single morning and I hop on with like our... Yeah, that's a good start. You really can't beat a morning where you see the sun come up. But I have a kid now. We have another one coming.
Awesome.
So
okay.
Sometimes I'm up in the middle of the night a couple times, and I've always got a pulse on the market, especially with being a dad. So I'll wake up and chart the market with the group we run, and either if there's a scalp in the morning, we'll hunt for it and trade it. But some afternoons we only look for swings and we don't even check the mornings. So I'll either try to find a trade to scalp or just kind of passively watch the first 30 minutes. But chart time is just, you can't replace it. So if I can just wake up and look at the markets, it's that time in the markets that's going to help me become a better trader. So I always like looking at the candles and the setups and seeing, what would I do? If it's an A+ setup, then I fire away. If it's not, I just keep watching and learning.
Right.
So that's kind of what I do.
Right. So the family man. So you've got one and you've got one on the way, correct?
Yeah. And it's a lot of work, but it is. It's very rewarding, like they say.
And what would you got? A son, daughter?
Son, yeah.
You got a son. Awesome. Okay. All right. So all the best to dad. And making time. It's a good excuse to get up and look at the market. Be like, no, honey, stay in bed. I'll go check on the little one and actually log into your computer and put some trades in. But see if that works. Now, as far as we all have them, strengths, weaknesses, what are some of your strengths that you're very proud in trading?
Strengths, I think I respect the long-term trade. I respect that the market goes up over time, and I position myself to take advantage of that, because when I first started trading, if I just invested every dollar every month into the markets, like I'd be way more well off than I am now. And I think I paid that lesson for too many years. And now it's just about like, can I just buy assets and accumulate assets? Because I've seen the market just go up and up and up. And if you look at the chart from like the 1960s or 50s, like it's a no-brainer. Like just keep buying, buy. So that's my strength, is just realizing that my time is best spent not trading, 1 minute moves, but playing just long-term trends and selling options against positions at the right time or buying the dips with conviction. So I'd say that's where my strengths are. I'm great with technicals. I'm basically obsessed with the market and tech and the charts and reading fast moves and slow charts. So that's those two things together are kind of my superpowers.
Your superpowers, I like that. Superpowers. Now, you're the mechanical engineer. That. Do you think that mechanical engineer background helps on what you do and what you look at and how you process things?
Yeah, for sure. The pattern recognition is, I like how engineers train themselves. Like you look at a math problem, like what's the solution? What are the steps to find it? And so that's the market. What's the solution? Where's the trend? Where's the entry from that? What are the steps to making money? So it's very similar to how engineers solve problems.
Right. I figured that. I mean, if I was a fry cook, I would probably have no use of using that as to help me trade. But being, yes, the mechanical engineer definitely helps. Now, how about strategies? Anything that you can share with us since we're trading futures?
Yeah, for sure. So I trade futures, and I love futures. It's a little too fast for me. I'd say that's my weakness is leverage with small amounts of time is just something I don't like. But I will scalp like my Topstep account once in a while. And I love going off 5-minute order blocks, basically 5-minute supply and demand. And that really serves me well.
All right. So you're on the 5-minute there, looking at it pretty quick. What market you trading futures?
Either like the ES or the NQ. So just the funds.
And looking at two of the three sisters now, of course, you've got the NQ, which drinks about 10 cups of coffee every day. And you're looking at the ES that has maybe a couple juice boxes and sort of putts along. But, it really depends on, how focused you are. And I like the way you're sort of watching both because, you can almost put each chart on top of one another. And, at times they look the same, but obviously we know that one runs much quicker than the other. And sometimes, the day you got to sort of dial it back a bit, kick back in the gears, lay off the gas a bit, and trade that. Yes. But, good choice. How about risk? How do you manage risk? Oh boy, this is a good one. Get your pencils and pens down for this one.
Yeah. Futures, man. It's like, a whole nother degree you have to earn as a trader. I mean, I would trade stock like TQQ. I would trade options, and every one of those is like a learning curve. But futures is like 3 learning curves. I think it's a lot harder than anything else, mainly because their opportunity is much longer. You could trade every second of the day. That can't be healthy.
Almost.
Yeah, almost. But the way I manage risk is, when I find these zones to get in and out, I'm either looking for 10, 15 point stop loss and then just, have that lay under the lows and then look for 20, 30 points up. So that's like an NQ setup right there.
Right.
And if you leave runners on, that's the beautiful thing that can happen when you hit a good trade. But I love that with futures, you can just click away and have those stop losses in instantly. And there's no decay. So it's, the exact level you're at and it doesn't change and there's no wiggle room,
Right. Now, trading futures, if you could share with us, how do you determine when to enter and when to exit a trade? I know you mentioned the 10-15 stop, but how do you find a good entry where you say, hey, you know what, this looks good. This is where I'm going to start.
Yeah, like I said, when you have defined tops and bottoms, and if they're considered order blocks, I like looking for second touches to those for reversals. So I'm always looking to play like a previous level. And again, if I can get in and put my stops over the highs or under the lows, that's a trade I'll take. And depends on the situation with position size, but this stuff, 20 points on the NQ is happening every couple of minutes. So there's so many opportunities. And if you have the patience and you play correctly, it's insane what futures can do.
Right. There's a question on our YouTube channel. Ank is asking, how about the TA technicals do you use? What's your edge and what sessions do you trade? Morning, afternoon?
Yeah. So technicals, I only like the, RSI is like probably the only technical I'll look at, but I don't use technicals to take a trade. I just use price action and key levels. I've found that, over time indicators just end up being a coin flip, and they don't really show you like where a stop loss could be and where a profit zone is. Like the MACD is never going to tell you those situations. So when you play off technicals, you can use, or play off the key levels, you could use those as your profit zones and stop losses, and it takes that guesswork out. So I'll trade mornings and then, last 2 hours if I'm scalping futures, and that's pretty much it. Sometimes at nighttime there's a good setup, but I really don't like to look at the markets too much when they close.
Okay. All right. I completely understand. As we're trading, we tend to have highs and lows, and as far as us personally, not our markets, how important is emotional control in trading, and how do you maintain that?
Yeah, that's a loaded question for sure. Emotional control, it's great with Topstep because you hit your daily drawdown, you're done. So that's the one thing people really can't do is walk away. And I love that Topstep has that integrated because most people can't figure that out for a while. But it's super important. Like even when I'm trading with my larger accounts, like if I hit one big bad trade, it's like done for the week. I'm not doing any more trades. If I'm swing trading and I hit 2 losers, I'm done for a week or 2. So it's about putting time between losers. I think that's the most important thing. And I've struggled with it in the past. I think when you lose, like there's that instant reaction to be like, how can I get it back? What's the quickest way? How many contracts can I take? Load it up, load the boat, and just have it come back instantly. I think putting time between the losers is the key, because everybody's always going to try to do the dumb stuff and go on.
Become reckless. Yeah, it's a revenge trade. It's I got to get that money back, and we sort of lose sense of our game plan and our commitment to following strict rules in trading, and that's when we sort of veer off into the wrong path, or you say fall off the horse, because we want to get that money back right away, and we're not thinking straight. Now, don't get me wrong, sometimes you can get that money back. I mean, it's happened to me, but the majority of the time, and the odds are against you that you're just going to dig that hole deeper and deeper once you start hijacking or revenge trading, emotions hijacking the account, and things like that. You've got to be very careful. You've got to ask yourself, is this what I'm supposed to be doing? Should I be doing this? And if you don't have a good answer, most likely you're revenge trading, or your emotions are starting to hijack your account. It's just a matter of when you ask yourself that question. But stuff.
You know what happens, Eddie, is that when you revenge trade, you'll sometimes step over a great winning trade to hit a home run. And so I've seen people like they lose 10K, and then their next trade they're up 5K, which is like might be a great trade for them, and they let it run to win back the 10K loser, and then they give it up and then it goes back down, they lose money. So I've seen that happen a lot too. Like your revenge trades make you blind to just what a good trade was, and when you have it, you just don't respect it. And I had some dude just comment on a YouTube stream I was on. he lost, I think, 75K, and he wanted to just dump 25K into the next trade to make it all back. And we hit like, I think 200% on the FOMC stream. And he could have made like 50K, I'm sure. But when you're not emotionally in the right mindset, you just never going to play the winners correctly.
Yeah, you're grasping. You know, it's like horse blinders. You know, you only see so much, but you're missing everything outside that could give you opportunity. So you got to be careful of that. And that, like I said, you've got to question yourself. You know, should I be doing this? And usually, I mean, if you can ask yourself before it gets a little too deep, you're going to save yourself from doing something foolish, reckless like that. Now, Matt, you know, everyone's always looking to continue to grow. I mean, we're always people here at TopstepTV, traders that are watching TopstepTV, people out there that are drawn to education and knowledge. Now, we all want to continue to grow. Now, what are you hoping to continue to work on most right now to see your trading grow?
Yeah, for me, I'm mostly just looking to refine what I have, because I think there's this endless chase of knowledge and endless search for like a flawless indicator that just keeps people from making good great, or making like a good strategy excellent. And so what they do is they go from like maybe good to maybe they get to great, and then they go back to like mediocre because they threw on another indicator, or they hopped in another Discord to some dude that's trading something totally different. So I just want to focus on one thing for another year or two and just get to that point where you make it better and you become a master of it.
Right. Tushar has a question here on our YouTube channel. Do you have a separate strategy for the evaluation challenge?
No, that same strategy I like to use on options, investing, and futures. Just basically playing key levels and putting stops at the right place, putting your profit zones at the right place, and letting winners run if the market is showing it's the right place for that. So, like I said earlier, the endless chase and pivot is what kills traders with strategies. So I don't want to be changing up a strategy, maybe from eval to funded. Like, that's not going to help me on the long run. So,
right.
Yeah.
Right. You're throwing a no-hitter with 3 pitches, and you're like, I'm going to try this 4th pitch. Stick with what's making you go forward. How about significant improvements? Now, I've been doing this. I've been in this business since 1985. It's a long time ago.
Nice.
And I can honestly say that I am improving each and every day, whether it be from listening to Michael and Hoag and Danny and Mick, and Andre, to our traders here, just reading what they are sharing with the community. It's very good stuff. Now, if you don't mind sharing, what are some most significant improvements you have made with your trading that you could share with us?
Yeah. I think the day I turned profitable was also the year I started selling options. I think that was huge because the market will trade sideways for much longer than it'll trend. And so you'll make a lot of money from a credit spread or like a cash secured put in moments where the market's untradeable. So people try to bring in full-time income trading, but the market may just be crap for a month or just sideways for 3 days straight and chopping you out, stopping you out as you're chasing breakouts, or there's just massive liquidity sweeps in areas. So when I integrated that was huge. And we've counted our credit spreads for the last year just to see what the win rate is. And it's, over 80% with a credit spread. And I don't know many traders that can out of the gate, hit 80% without really knowing too much, about the markets. So, when you're scalping and trading, it's like fine tune and it's got to be perfect and you have to be emotionally stable. And when you sell options, you just take out the emotional aspect. Like it's a lot slower, it's boring. So that was something huge for me. And I think the big thing I learned 10 years is just not putting myself in a box. Like I'm not the dude that wakes up every day and scalps like with 10 grand or 20 grand. Like it's beyond my emotional capabilities. So just not feeling bad about yourself when you're not successful as one way or the other as a trader. And when you go on social media, not trying to live up to those standards. I think that was huge for me. It's just being comfortable with my strengths and kind of leaning into them more. So those are some things that I've learned.
Yeah, let me ask you about Topstep. How long have you been with us here at Topstep?
I think almost 6 months. One friend told me about it, and I was just hooked. I thought it was a great idea, just in terms of teaching others. Don't need to sacrifice your own money to, learn the markets. And if you are successful trading, you could unlock way more capital with a funded account. So yeah, I've been really obsessed with this space recently.
That's great. Now tell us about Market Moves. Who is this Market Moves person?
It's just I guess the company name. We used to call it Market Moves Matt, but Market Moves with Matt. It's just Market Moves at this point. Okay. But we just been making content since pre-COVID on YouTube. I didn't know any YouTube option traders when I was making option trading content on YouTube. So it's so saturated now. I'm barely going to be known. I can't even get my content to go get as much reach as it used to. But it's crazy what's happened in this space with COVID. I love how more educated the world is. But yeah, when I was out there putting out content, there wasn't many other people.
Well, you've developed a fan base, obviously. 7 million views is a lot. Yes, I mean that is a lot. But you've built it up. You've earned this, with the positive education and knowledge that you're sharing with people. And a lot of, you said it. Right now the content out there is a little overcooked. There is a lot out there. Now, I mean, the thing is, you've sort of got to look and hook up with somebody that you can relate to, somebody that isn't the kind of education that says, do what I do and you'll be rich. Because, I mean, I call them coat tailors, where they're doing whatever the teacher is doing to have that profit. And the thing is, here at Topstep, we talk about, give a man a fish, he'll eat for a day. All right. Teach a man to fish and he'll eat for a lifetime. And that's what we're trying to do here. And I think educators like that, you need to find those kind of educators, because they're not going to be there forever. Okay. And I mean, at times they might not be there. Maybe they might go on vacation for a week or two. And then what are you going to do? Okay. So learn from educators that share, and that you can sort of fill in your gaps that you need to fill in, as far as what I need to do and so forth. And then we think, Market Moves is a fantastic place to be. Now, real quick, Matt, what is that YouTube site? How can we find that if we want to check it out?
I can drop it in the chat, but just Market Moves
So they can go to YouTube, just type in market moves, and let's see it. Yeah, let's check that out. Now, another thing. Go ahead.
Oh, sorry. I was just going to say we did some podcasts. We have like a market moves podcast. It's had some people on it, but nothing crazy.
Nothing crazy. Who wants to be crazy nowadays? Crazy is the new norm, though. Didn't you know that, Matt? If you're crazy, you're normal. It's if you're normal, you're crazy now, right? So you can't be normal.
That's true.
But,
so you've been trading for like 30 years, for 40 years?
Well, I mean, but my sister was filling S&P orders. And she got me the job on the trading floor, and I started as a runner. I had first time I got on the trading floor, I was like, wow, look at this place. I mean, if you had the opportunity to be on the trading floor, it's just the hustle and bustle of organized chaos. That's what I call it. It's organized chaos. And I mean, I was hooked right away. And, what really hooked me was, I guess one of the other brokers bought like 20 pizzas, and they had them upstairs. And she's like, well, hey, you want some pizza? I'm like, well, yeah, I'll go upstairs. Oh, so-and-so guy. We do this all the time. I'm like, really? Free food all the time? So I'm like,
the pizza
is even better. But nice. She got me a job running, and then I worked my way up. Then I learned the arbitrage. Arbitrage is the hand signals, the numbers, and so forth, and how to put in orders and so forth. And then the company gave me my own desk in the foreign currency. And so I had my own runner, and I would be taking phone orders. Then I got a little itchy and decided to jump in the pit. And first started. I mean, there's steps that you've got to do. You can't just unless you got a rich uncle, a rich grandfather, or a rich father, that you can just sort of jump in and say, hey, I got a seat, I'm trading. But I went through all the. I worked in the pits as a ARB clerk. And then nice. I got hired by First Chicago as a trader, and that worked out very well. But it was a process, and it's been a long time. But like I said before, I'm learning something new every day, Matt, and I love it.
Yeah, you got it.
There's nothing close to anything like we do right now. I mean, it's very tough. It's very tough to sort of line two things up and say, yeah, this is like what traders do. It's hard. It's hard. They say maybe a professional gambler. But, I mean, the thing is, gambling has, I mean, you can have the rundown on, let's say you're a football game yesterday. I mean, you've got all those that are not going to play today. You've got those on the injured reserve. You've got this guy starting. I mean, you can put all that together, sort of like what we do here. When we trade, we try to put all the pieces together to see what the possibilities can be. And, we go from there, but, excuse me.
For sure.
Otherwise, there's a lot to be said, and, I don't want to take time out from here, but, I know that you were an engineer, and you did go to college, and I want to hear about this pro runner. I mean, you look like the runner, me, I'm a pro walker. Okay. I'm lucky I can get through the mall without sitting down. Okay. And my wife knows that. Honey, you sit right here and wait, and I'm going to go run around here and shop, and then I'll come back and get you. And I'm like, okay. All right, I'll wait right here and watch people go by. But tell us about this running. Who are you running from? You're Italian. You shouldn't be running from anybody. Hey, bada bing.
Yeah, my dad used to say he only ran from the cops, so he has no clue how, I was a good runner.
So
he didn't last too long either because the cops always got him.
He was the one sitting down and sitting at the mall going, we got you now. Go ahead. Okay, got me. What did you do? How marathon races? What kind of races were you doing professionally?
Yeah, I did the mile mostly. So, I tried to qualify for the Olympic trials, and I was really close, like super fit, was on the edge of doing it. And then COVID hits and there's no races. So that was kind of the end of the career, man. Trying to run without a race in the future. And it's grinding. And I'll tell you, like trading, when I got really good at trading, it was very hard to keep running because it's hot in the morning. You want to run in the morning, but it's also the best time to trade. But you also have to sleep because you're tired from training. So it was kind of pulling away from everything, and ended up focusing on the business and my future life. But COVID was a killer. And
I mean, it's just sports training, and especially running. I mean, you've got to have that stamina. I mean, severe stamina. Like I said, I never was a runner. Even in grade school and high school, they'd tell you to run around the block twice, and I'd be like in the last 20% coming around and doing the best I could. But you always had that one special kid that would lap you, and it'd be like, you just see him go by again, But I mean, it takes a lot to be a runner.
I used to be the kid getting crushed, getting lapped and, getting dead last. It was kind of awesome to come from nothing to being I was ranked first in the nation for multiple events, for multiple seasons.
Really?
Yeah. I mean, for college, not professionally, but, I was not great. So it was kind of cool to always be better and get better every year and see progress pan out. And I think what's depressing is when it levels out and you have to work 10 times harder to get a tenth of the progression. And that's what was something I never felt until, I graduated. You trained 3 years just to shave a second off. And it was
right.
You train 10 times as much,
Really?
Yeah.
Just a second.
Yeah, so I ran a 3:59-ish mile, if you convert it from the 1500.
Right.
And I got injured for 2 years after that. And then the third year, I was healthy, had a great year, and I only shaved off a quarter of a second from the previous time. So 3 years of just pursuing this and putting everything into it only for a quarter second. And when you reach the top, that's the best you're getting sometimes.
Wow. Incredible. I didn't think it was that tough, honestly. Wow. But
yeah, I mean, what's tough is you're not getting paid. You're not, no one's cheering for you at practice. No one's paying for your travel. No one's supporting you. You got to work a job. It's tough to do it, man. You're tired all the time.
It sounds like trading. Hold on a second. Wait, we talking trading or running? What do you? See, they're in balance. I mean, you're on it on your own. It's all about you. And I mean, I got to give you credit for that. I mean, that's something tough. Now, real quick, what school did you go to? What college?
I went to RIT in New York, upstate.
Okay, and then you moved to Colorado, or did you live in New York?
My whole life in New York, and then last 8 years in Colorado. Just epic out here, man. I would recommend everybody comes out if they haven't yet.
I know that's. My aunt lives in Colorado Springs. I know that Nebraska's out there too. It's a beautiful. I tell you, if there's ever a massive flood, I'll be knocking on your door because Colorado is the highest in the country. So what they say, Mile High Stadium for Denver? Yeah,
that's the city. The city's mile high. Yeah. But if you go 50 feet higher, it's a legitimate mile. I think a certain part of the stands at the baseball stadium is a certain color because it's legitimately a mile high.
Oh, really? I didn't know that.
What people don't know is the 14,000 foot mountains are shrinking every year. So it's like a feat to climb a 14er, but like they're falling down every year. So like there won't be many 14ers like 100 years from now.
Oh, I know. I know. My grandma said, "The older I get, the smaller I get," and she was like shrinking. And now that I'm over at that age, I'm shrinking too. So I can relate to that. But anyway, Matt, I appreciate you being with us here today. A lot of great information. What's your YouTube site again? It is Market Moves.
Yeah, I threw that in the chat too.
Okay, all right.
Appreciate you spreading the good word.
it is a good word. Check it out. Market Moves with Matt Giannino, our good Paisan Goomba. And Matthew, I appreciate your time here with us today. And would love to get you back on here down the road, please.
I love to. Love what you guys are doing. And this is a fun time for me too. All
right, brother. All the best to you, the family, and the new one on the way. Let's keep in touch. You have a fantastic week, brother. You take care, man.
You too. Have a good week. See you guys.
Take care. All right, folks, don't run away. Oh, we on? Still? Jack. Okay, we got Top Quiz with Jack and Grace. And, hello, Grace. How are you, Grace? So, now it's time for Top Quiz. A lot of people have been asking about that, and we want to make sure that we know that, we got the number up there. Look at 245, 247. So people are logging in now. Log into Kahoot.it and enter that game pin. 750-4795 is the toll-free number. No, it's just a number that you type in there. All right. So I'm going to pass it over to Jack and Grace. Grace, kick some butt, okay?
Thank you, Eddie.
Okay.
I'll take it over here. I'm going to put some smooth jazz on real quick while we get ready. See you in a few minutes. We're giving away 5 random combines and then to the winners. So enjoy the music.
Oh, yeah.
Hello, everybody. Welcome to Top Quiz. Today I'm playing with Grace. Grace, how are you doing today?
Just great. Happy Monday, everybody.
Yes, happy Monday indeed. So, if you didn't hear, we're giving away 5 random combines today to people that sign up for this, and the winners also get 150K trading combine. 7 multiple choice questions today. You got 10 seconds to answer them right, but answer them fast because you get more points that way, and we all love our precious points. Don't we, Grace?
We do. Points
Yes.
are it.
So if it's your first time playing as well, there's a delay between what I do here and what goes out on YouTube of about 7 or 8 seconds. So answer those questions as soon as they appear on your device. Do not wait for me to stumble over any misspellings that I made in the YouTube. It will not go well for anyone. So I'll give a few more seconds here for people to get in as I get set up here. And let's see who's going to be the last in here. We got RT3, DC. Okay, let's get this started. Oh, that a bunch coming at once. E-Trader, shorty go long. Yeah, that must be Little John. Remember Little John? He was great. All right, we got 347 people in here. I got cut off at some point, but we will give away 5 more combines during group coaching. I am going to figure out how. It might be a quiz, which is one question that's true or false. Do I want to be entered? All right, you ready to do this, Grace?
Let's do it.
Starting. Kahoot! For the 25th of 2023. 3, 2, 1. There's a theme to the first 3 questions.
Okay.
Yesterday, the Dolphins scored the second most points in NFL history. What team scored 73 in the 1940 NFL Championship? Was it the New York Giants, Green Bay Packers, Bears, or Baltimore Colts? You got an idea, Grace?
You know what? I don't. I watched the Dolphins game, but I don't know who it was.
It was the Bears.
The Bears.
If only I could be. The Bears won the Super Bowl a year before I was born, and I guess scored 73 many years before I was born. It's been pain since then. Grace, didn't you used to work for the Dolphins?
I sure did. So I'm always watching the Dolphins, seeing what they do. 70 was, I was a little shocked when I saw that yesterday during the game. I even gave a good old Pops a call. Was like, did you see this?
Yeah. Well, you'll be thrilled to know that my good friend Joe Poos is in second place right now. Chart language in first, and Ash $signs after 1. Second question of the 3-question theme. Which country has the most islands? I scrambled up the order. Is it Canada, Norway, Sweden, or Finland?
You know, you wouldn't expect any of these, but I feel like it's Canada.
It's Sweden.
Oh, well.
I had to look this up. James helped me with a few of these questions here, and I literally did not believe that, so I had to go check it again.
Yeah, that's hard to believe, but...
I feel like such an idiot. I said there'd be a theme to the first 3 questions, but I remember now that I decided to space them out. So there is a theme, but maybe not the first 3. Saw the islands in football. It's too much. I think I have brain damage. Okay,
it's
next
Monday.
question. We got. Did you see the movie M3 again, Megan? No, it was good. It was fun. All right, question number 3. How many straight regular season games have the Chicago Bears lost? That's regular, not regular. Is it 5, 8, 10, or 13?
I don't know for sure, but it's definitely not 5. It's higher than 5. I know that for a fact.
Yes, it's 13.
Yeah.
Oh my God. This is the theme, guys. The Bears have, lost 13 straight games. Okay, doke.
I feel bad. I'm a Lions fan at heart, so, we've been there.
They're good.
This year. They're good this year, Jack.
Y'all deserve it. As does Landon, Jay, and Ray N, and Bucky Trader, perhaps a Wisco fan. All right, 4th question.
Let's do it.
Which blood type is a universal donor? Is it O negative, A, B, or AB?
We'll see. I got a feeling I know this one with O negative. That's what I put. I just had to think it was right before I just called it out to the world, though.
I'm bad with the blood types. I didn't even know mine until they had the test when we were having a baby. And I don't remember where it was, so it must be common. All right. Landon knew it. Bucky Trader, Jay, belligerents in the wings again. Let's go on to question number 5.
All right.
Which massive celebrity was at the game yesterday to see the Chicago Bears lose in humiliating fashion?
Oh, well, this is an easy one.
Beyonce, Barack Obama. Now, hold on. Taylor Swift or Bono?
I wasn't going to share. I just know the answer for this one.
I figured you might. You definitely knew if you watched any of the game. They went back and forth quite a few times.
Oh, yeah.
Yeah, the Bears were down 34 points at halftime.
It was a little bad for Chicago fans knowing that she was sitting there in the suite watching.
Yeah,
the Bears.
No more football questions after that, but yes, man, are they really bad. Okay, next, after a quick view of the scoreboard, we have a couple more questions, 2 more to be precise.
Let's do it.
In what movie does Robert De Niro say, "You talking to me"? Is it Meet the Parents, Taxi Driver, The Godfather Part 2, or Goodfellas?
I wish I could say I knew this one.
It is Taxi Driver, which I believe Robert De Niro, for Lord only knows what reason, is reprising the role of Travis Bickle in like an Uber commercial.
All right.
Guy loves to act, or money, or both. Probably both.
Probably both.
That would be my guess. All right, with one question left, we have Landon, Belligerent, and Roga. Make sure. Yeah, making sure I'm not getting flamed here. Football is whack. Do Formula One. I did a Formula One question the other day. I did.
Formula
One step
One?
ahead. All right, last question, Grace. You've been killing it.
All right, let's do it.
What is the name of the world's hottest chili pepper? Is it a ghost pepper, a habanero, an infinity chili, or the Carolina Reaper?
Ooh. I don't know. I'm definitely not eating any of them.
Yes, that's a good idea. It is indeed the Carolina Reaper. So
It doesn't sound like it wouldn't not be spicy.
don't eat anything with Reaper in the title.
That sounds like a bad idea overall.
So, Grace, I know you need to leave quick, but let's see who these winners are.
Let's do
Shall
it.
we?
Oh, yeah. I got you.
Okay, podium. Today in third place, Raga. 2 is Belligerent.
All right.
And taking the top spot today is none other than my good friend, Landon.
Landon,
Congratulations, my man. Bad tuna salad. Better luck next time. But there is still luck for you guys because we're going to do group coaching right now. I'm going to work on getting those my random setup together, and then sometime during group coaching, I'll draw 5 winners, and then we'll take submissions for 5 more. So you won't want to miss that. 5. Grace, thanks again. Wonderful having you on. We're going to take a quick coffee break right now as Ho gets set up for group coaching. You don't want to miss that. So here we go. See you on the other side.
Good afternoon, everybody, and welcome to Topstep's group coaching session. We like to call it Let's Crush 2023. Almost into the fourth quarter. I think we're doing a pretty good job of crushing 2023 time-wise. This is me. My name is John Hoagland. If you don't know me, I'm a senior performance coach here at Topstep. I've got 40 years of industry experience. More like 30 some odd years as an active trader. I traded on the floor of the Mercantile Exchange for 20 years and migrated to screen trading in about 2009. That's when the opportunities in the pit really kind of pushed over into screen trading. It's been a challenge ever since. There's no doubt about that. And since 2011, I've been here at Topstep and had the opportunity to talk to thousands of traders and from all over the world, and hopefully it's been as beneficial to all of you as it has been to me. Certainly don't know everything. I'm not a trading psychologist, but I do have some really good experience working with trading psychologists in the past, and I'm going to bring my experience to you if there are any questions with regard to that. And again, nobody knows everything. I certainly don't. I'm not going to lie to you and tell you I know something that I don't, and it's one of the things that I love about doing this session is the fact that there's always more to know, always more to learn, and I do a lot of that here working with all of you. So I'm looking forward to seeing everybody here. Let me make sure that the chat is working here on this. There we go. Inner Circle, I see your question, and I will certainly touch base on that. I do have some emailed in questions that I have to get to first, and we're also going to be doing another brief Topstep top quiz, because we've got to get up to 10 free trading combines distributed today. So we're going to do that using your emails from that. This is the CFTC disclaimer. We should all know this. I mean, futures and Forex trading does contain substantial risk. Options also. These are leveraged products. You should only be using risk capital to trade with. And to me, risk capital means it's money I can afford to lose. Just take a quick look at this and know that what we're doing here today in group coaching is for educational purposes only. We're not going to be calling trades. We're not going to be, suggesting purchase or sale of anything. It's really just an educational opportunity for everybody. So I'm going to go with the questions first. I'm not sure if anybody that has emailed these in is actually here. But I've got a question from last Thursday after group coaching. Well, I think it was before group coaching, but I wasn't doing the coaching. So there was a question. I find it very hard to stick to my plan. I saw my setup is not there, but still I look to trade following signals or a YouTuber. How do I control that? Well, Magda, I'm without knowing your experience in trading and your knowledge of markets and especially self-knowledge, it's a hard thing to do, right? I think that a lot of traders, whether they're new or experienced, if they're just sitting there watching the markets, you fall into I'm going to put the chart up here so we can see that. We can come back to that later. Just watching the S&Ps here. I think a lot of traders, to call themselves traders, feel as though they have to be involved in the markets, right? So, and nothing is really further from the truth. you want to try and stick to your trading plan. You want to try and stick to your strategies. You want to try and, of course, stick to your journey, right? Your process. But sitting there looking at the charts and not seeing anything to do makes us, and this has been something I've dealt with a lot, makes me feel a little inadequate. You might be talking or hearing from other traders that they're taking all these trades and making all this money, but their expectations are different. Their motivations are different. Their decision-making processes are different. The tools, the chart types, all of these things are not really aligned with what you're doing. So you feel like, you know, if I'm going to be a trader, I damn well better be trading. So that's what kind of pushes us away from our process or our strategies, is if we're not seeing anything, we feel like we want to be doing something. And that usually is going to take you out of your strategy and out of your process. Listening to somebody else taking trades or suggesting taking trades, you know, it is to me a way to alleviate my own responsibility from taking the trades. If I take a trade that somebody else took, or a trade that somebody else suggested to me, then I'm not responsible for the outcome. Okay. And we want to make sure in trading that we are always taking responsibility for anything and everything we do and happens to us in trading. You take a trade provided by somebody else and it's a winner, we're probably going to feel like a genius. Yeah, there was somebody else's trade, but I took it and I'm a genius. If it's a loss, then you can sit back and say, well, that wasn't my idea. This person cost me this much money. So you really want to take responsibility for everything you do, even if it is suggested by somebody else. But if you are taking a trade that is not part of your strategy out of boredom, there's 4 different things that can happen internally to you. Number 1, well, there's a kind of a hierarchy of decision-making when it comes to taking trades. The number 1 is a trade that is in process and in strategy and is a winning trade. That does the least damage to a person. How can they, right? So the second most important or positive trade that you can take is a trade that's in strategy and in process that's a loss, okay? Because it's in strategy, it's a good trade. Because it's part of your process, it's a good trade. 3 and 4 are the bad ones. Now, number 3 is a trade that you take out of process and out of strategy that is a losing trade. It's damaging because it was not part of your strategy, and you actually had to pay for stepping away from your strategy by taking a loss. The worst thing that can happen is taking a trade out of strategy and out of process and having it be a winning trade, because that's going to reinforce that bad behavior. And I can tell you from experience that 9 out of 10 or 99 out of 100 of the next trades you take that way aren't going to be in your favor. So, Magda, take your time, stay in strategy, stay in process. There's going to be periods of time when your strategy and your process aren't aligning with the markets, and the market is going to tell you that by creating losses. But as long as you're staying in strategy, you're able to review the information that you're getting because you're staying in strategy. And you may be able to recognize changes in the market state that may cause you to make slight adjustments in the trajectory of your trading plan to get you back on the right side of the markets. Sometimes things just don't work. Sometimes things work very well. We can never know the outcome of any trades. And so, my suggestion to you, Magda, is if you don't see a trade, don't take a trade. When you start to get that feeling like you're missing out on something, you hear about other people making money or making trades, that's not you. You have to be you. You have to trade as you, and you can only trade as you. So get used to the idea that being a trader a lot of times is very boring because we're not seeing opportunities. Maybe our first hypothesis doesn't play out for us, and we don't have a second hypothesis. So we sit there looking, scratching our head going, okay, now what do I do? Now what do I do? The best thing to do is don't do anything until something comes to you, the market comes to you, an opportunity comes to you. Don't go looking for opportunities because you're going to find them. And they're probably not going to be good. Waiting for the market to align with a strategy that you've got in place takes time, it takes effort just to sit there and do nothing sometimes in trading, right? Thank you very much for the question, Magda, and I hope that's going to help you along the way. Now, I got another question here from Fred. Now, this is a market profile-based question based on Friday's completed profile. So I'm going to bring that profile up here. Okay, this was Friday's completed profile, and what kind of a crazy day that was, right? So Fred was feeling confused by the price action. So in C period, the range extension to the upside here. The day type was a double distribution trend day moving forward. So there was a distribution here, and then the market moved away from it, possibly creating a double distribution trend day to the upside. Sellers were able to defeat buyers, to defeat the single ticks in F period. Where is this here? Where are we? CBC, this is Friday. See, I'm not seeing the double distribution here. Oh, right here. So yeah, A and B, there was a price parlay over. Single ticks in B period right here. C period continues. F period is able to take those out. So the double distribution trend day is now off. So they were able to move price lower in F period and then in I period. So Fred, one thing that the one thing that I know you know is there was a very small initial balance on Friday. The market looked above the initial balance, and then it looked below the initial balance. So there is a high probability of range-bound trade on a day like that. You should probably, as your question asks, I wonder if I should expect a rotational end to the day Friday, which in large part till the very end it was. So we have I period, J period, K period, L period comes all the way back up to put the afternoon pullback high in. It was an extremely difficult day to try and maintain rotational strategy on, because it kept extending the range to the upside. B, C, D, E. How are you going to look for rotational trade up here? You probably weren't. You were probably looking for an opportunity to buy a pullback for continuation. Perhaps that might have been kind of the thought. But when the market looked below and started moving below, now because it traded above and below the initial balance, which was again very small, now I start thinking, all right, well, we're probably going to remain rotational. I period low gets taken out by J period low. This was a very difficult trade to take, especially knowing that we had a late spike. We opened in the late spike. The market looked higher, didn't continue. Then we're making new lows. How do you buy this down here? It would be a very difficult trade to take. So your question is it, have I ever seen a double distribution trend day to the upside turn around and create a double distribution day to the downside? Which it did for a little bit, but by the end of the day, there was no double distribution on this trading day. It was a normal variation trading day, extreme, with the points of control very high. Okay. So in K period, the 130 at 130 K period, it did put in a poor low. It put in a weak low. How do you buy against that? I'm so glad I was done trading by this time. How do you buy against that? Because, and we know that L period put in the afternoon pullback high. Okay. So to have a good grasp on what was taking place on Friday was very difficult. What do I think was going on? I think there was a lot of probably liquidation from short time frame or medium time frame speculators getting out of the market, and that is supported by the loss in 8,700 in open interest. 3 straight days of late spikes to the downside. By the end of the day, that's what occurred. We're also seeing deltas that are congruent. Late spike to the downside, delta negative. Late spike to the downside, delta negative. Late spike to the downside, delta negative. Losing open interest on Friday indicates a lack of longer time frame participants in that trade, in that day. Okay. All right. We are going to go ahead and do the drawing now, so we can get moving on with group coaching. We want to make sure and get everybody's free trading combines out there. Jack.
Yes, so I am doing quite good. Thank you very much. So I'm going to draw these 10 random numbers now, but in the thing of transparency, here is the spreadsheet with everyone that signed up to play today. Here is my random number generator between 4, because the winner's already won, and 452. I'm going to generate 10 random numbers.
Okay, cool. That's all right. That's how we're going to do this. All right, excellent.
Yes. Okay, so here we go. Here are the numbers. What I'm going to do is copy, paste these over here. And I know it'd be riveting TV for me to go through these. I'll go through a couple right now. I see 18 is D.BK2. I'll do the 76, and then I'll just announce the rest once I have some time to go through this and people aren't looking at me doing Google Sheets. Zarma, good on you.
All right, congrats.
All right, so I'm going to get through these, Hoag, and then a little later maybe at the end of group coaching, I'll come and read the rest of the winners. All right?
Okay, yeah, you got it. Thank you.
Later, Hoag.
All right, and congratulations to all of those who won. Those are 50K free 50K combines. Very nice. Okay, now I'd like to take a break from the emailed in questions and address the question that ICT put in here, speaking briefly on the changes I encouraged coming from the floor to the screen. It's a really good question. First of all, I was fully expecting not to be able to transfer from pit trading to screen trading. I had a number of acquaintances or other people on the trading floor that had tried to make that change prior to when I did it. And I think that it was a good thing that I waited to hear about their experiences before I started trading exclusively on screen. Most of them were failing miserably. They were not doing well, if they were even continuing to try. And a lot of these people, came, they were very successful floor traders. They had a lot of money, and they had eaten through a lot of their money trying to trade on screen the way they traded in the pit. Too much size, not enough time, I think, relearning trading with no eyesight. And when I say no eyesight, ICT, trading in the trading pit, is maybe some of the larger trading pits, especially, we could see, especially when it was all execution was in the trading pit, you could see when some larger time frame traders, Goldman, Merrill Lynch, some of the bigger, traders, Tudor Jones, Soros. I mean, these were all big players in the markets and including in the E-mini S&Ps. So they're working on keeping themselves kind of spread or arbitraged all against a whole bunch of different products. But they were moving so much money that sometimes they'd have to, on one day buy 15,000 big S&Ps. Well, you could watch and you could see the progression go around the pit. You'd have Chi-Corp by 2,000, Shearson Lehman by 2,000, Bear Stearns by 2,000, Goldman by 2,000, Merrill by 2,000, Morgan by 2,000, and Kidder Peabody or whoever else. You could just watch this buying coming into the pit throughout the day, and you could take that information and you could make an assumption, and usually you could kind of tell or see it or feel it, that the paper isn't buying from other paper. They're buying from the locals. They're buying from the market makers. They're buying from the traders that are trading their own money in the trading pit. So, these brokers are giving up a little bit of an edge on that. But you could get a sense sometimes that the pit was way too long or way too short based on the paper coming into the pit that day. So, that was one of the things that you could kind of lean on, right? You could say, well, I think that the pit is really, really short right now, and we're coming into the end of the day. And if we don't get a pretty substantial break before the end of the day, we've got a whole bunch of traders that don't want to take these positions home, and they're all short. So they're all going to jump over each other, trying to get out of these positions so that they can go home flat if that's their choice. And most of them wanted to go home flat. There was no electronic trading. Anything could happen overnight. There were windfalls and nightmares that occurred because you couldn't trade outside of regular trading hours in the trading pit. So I knew that I wasn't going to be able to see that or read the pit or see what other traders were doing. So I had to really take my time and kind of scrap some of the things that we could use in the trading pit to succeed and find new things to find opportunities. Hey, Tanya, it's good to see you. Yes, Hoop knows. I mean, Hoop was on the floor. It was a rough transition for a lot of people. Many people never made the transition. I'm a futures trading survivor. I've managed to make that transition to a degree. I mean, I don't know if anybody can ever count on being consistently profitable forever. Even my dad said, if you get to a place where you're making serious money trading, you got to put a bunch of it away because nothing lasts forever. The markets change, things change. Just be ready for it. So, fortunately, I was able to do that and to some degree and to be able to maintain a degree of possibility moving from screen to from pit to screen. I did not trade live for basically a full year after I stepped out of the trading pit. I traded on real-time sim, just trying to figure out how I was going to be able to be confident, number one, in anything that I was looking at on screen. I've always been a kind of a profile trader, and the profile is still a big part of it. But there are other things that I'm looking at now as well. I lean heavily on a volume and open interest and direction of the auction process and longer time frame, even looking for opportunities in shorter time frame. The delta, which is in essence the number of contracts that trade on the offer, which is positive, minus the number of contracts that trade on the bid, which is negative delta. There are sometimes opportunities to be able to recognize longer time frame participants in the marketplace if you pay attention to it. And there's long stretches of time when you're not going to see anything that's going to give you any indication that longer time frame traders are necessarily involved. And believe me, they're involved to some degree every day. But when they have an accumulation or a liquidation, if they're using ICE orders, sometimes they create that delta divergence that says, okay, first, the delta divergence says, I do not want to fight these longer, the possibility of these are longer time frame traders in the marketplace. And number two, how can I take advantage of my direct, and I don't mean competitors, my direct time frame traders, the shorter, weaker hands, pea shooters like me. If the longer time frame traders are buying and they're using ICE orders to buy, they're going to be buying from shorter time frame traders who are using market orders to sell. So you're going to see Delta continue to go lower and lower and lower into negativity. But price isn't going to go that way. And then at some point, you might be able to see price move higher. We might lose a little bit of delta, but if the longer time frame is still present and they've moved their bids up, you'll see delta begin to increase in negativity again. Those are days that I relish because they can kind of give you a relatively clear picture of what's going on as far as the longer and short time frame traders are placed. There's no guarantees that is going to happen. There have been lots of times when I've seen this and it looks like we've got some longer time frame buyers and I position myself alongside of them. And I think, oh boy, this is going to be a big day at the end of the day because we're going to have all of these short time frame traders so short, they're going to run this market up on themselves and I'm going to take that ride. Well, if the longer time frame finishes their package for the day and Elvis leaves the building, the outcome can be a completely different outcome. So all of these things, the profiles, looking at the market through the longer time frame lens of auction process, volume, open interest, delta sometimes comes into that. All of those things hopefully will paint a picture that kind of becomes three-dimensional. And since TopstepTV, I haven't seen that third dimension in a while because just busy and talking and not really being able to focus on what I'm doing. And that's okay. I mean, I know that over time I'll get this figured out and we'll be fine with that. But it's never easy. And, I've had some really good periods and I've had some bad periods. And just like everybody, I'm a human being, I have confidence and I lose confidence, but I'm pretty sure that after 12 years of trading on screen that I'm going to be okay. I'm going to be able to survive. I'm going to be able to build the account. I'm going to be able to take money out of the account. But it was, like I'm saying, a completely different learning opportunity, You take the ability to see the fear in your pit competitor's eyes. And believe me, most of the time I had fear in my eyes, trading 10 big S&Ps is like trading 50 E-minis. And you weren't always assured to be able to get out of it. So you're always leaning on big orders. And, hopefully the leaning on that big order, at least you can lose one tick times 10. But, if you miss that, there's vacuums. I mean, the pit was a very harsh environment, right? So there were periods of time when the bids and offers, there was nothing there. If you were stuck, you were stuck. You just have to ride it out and try and get out. But thank you for the question, ICT. The most important thing that I can say to anybody who was a pit trader that is trying to move on to screen trading is relearn the craft from the bottom up. Relearn the craft. Read the books that you've read, reread them. Spend a lot of time trading on sim. I know it's not fun or sexy or anything to be trading on sim, but if you can trade on sim and just make that practice purposeful, not just practice. I mean, you can stare at a chart for 10,000 hours and learn nothing. You have to learn how you're going to respond under duress, under risk. When you have money on the table, how are you going to respond? And it's difficult to do that trading sim. But if you are accountable to everything you do and you treat it like it is a live account, there's some benefit to that, but you don't want to do that forever. At some point, you're going to have to take your foot off first base, give yourself a lead, and see what happens. And one thing about trading is trading is not life. There's going to be good times. There's going to be bad times. Lack of success at the beginning doesn't ensure lack of success ever. And I believe in my heart, I believe that a lot more people could be a lot more successful in trading if they could just get out of their own way. There's all kinds of psychological issues, and the duress of trading will bring out your weaknesses as far as trading is concerned, but it doesn't make you a bad person. And learning how to adapt and learning how to accept the possibility of success. I think a lot of people are subconsciously doing whatever they can just to stay where they are because it's much more comfortable. Change is difficult. And it's much more comfortable to stay where you are. And I think that you have to want to succeed. You have to want to change. And everything about trading is change. Prices change, markets change, tools change, time frames change, chart types change. Everything changes. And the more you can get your head wrapped around the change that you can provide in your life by becoming a successful trader, it far should outweigh the possible fears of becoming a successful trader. Right? So I kind of get on a little bit of a ramble here, and I apologize for that. But we were just talking at the end of Fast Markets how we here at Topstep, we really are looking forward to the success of the people that are trading here. I mean, that's been our goal since day one. And we do, I think, everything that we possibly can with, of course, the feedback of the people that trade here to provide that opportunity. I mean, the things that we provide, I don't think are available anywhere in the industry. We are the first in the industry. We're the first, SIMDIF funded trading company, and we are the best because we provide all of this information, and we truly look forward to seeing our traders successful. So on that note, Fred had a question from today, and thank you, Fred, for the question and always for the kind words. Give me 1 second, folks. All right, forgive me. So this goes to today's profile in the S&Ps. On Monday, September 25th, you talked about a poor high in the developing S&P 500 profile. At the time, A and B period was one tick higher than the B period. You seem to indicate that that it was important that the A period was made first. I thought a poor high simply a high with little or no excess. Either one tick of excess or no excess at all. I didn't know it mattered which period created a one tick tail. Can you explain why you're thinking and why it's important for the A period high, which was one tick higher, was made first? How would that have changed your thinking, and how would your thinking have changed if B period had been one tick higher than A period? So here, ladies and gentlemen, is what Mr. Decker is talking about. So I'm going to make this really big so everybody can see it. So this is market profile, and if you're not familiar with it, we are going to have a lot of opportunities for you to learn more about it. I'm just going to talk to Fred's question here. So the A period high is the high for the first 30 minutes of the trading session. The B period is the second 30 minutes. This is the high of the range of the second 30 minutes. If there is no sign of excess, it is considered a weak high. Excess, if we were to look at the bottom of today's profile, excess is when price gets too cheap. Sellers won't sell it anymore. Buyers move price higher, and we leave this, which is called a buying tail. So now we go back up to the high here where A and B are within 1 tick of each other. Fred, I kind of feel like it's somewhat just semantics, but it always seems to me that when the second period, B period, takes that one step above the previous A period here, it didn't. It stopped there, but there was no excess, and you pointed that out in real time this morning during fast markets. And my answer was, yes, I am paying attention to it because there's a lack of excess. Price didn't get rejected. It came back up and retested that same level. The more times it gets tested, the less likely it's it's going to hold. Right, Fred? So B period, I call a B, if the B period took out the high of A period, I would call that a poor high. This I call a weak high. It's semantics. Does it make a difference? If it were a precise rule that I could do every time, then I think it would make a difference. But I don't think that it really matters. It's just that the price came up to that same area again, took out any possibility of an excess high here in A period because B period came up to it. And yes, we had to pay attention to it. Now, there was something happened at some point here, and we were in fast market when we came off this low and we came up here, and I said, I'm not interested in selling this market at these levels anymore. Not interested here. This market is going to give us an opportunity to sell at higher pricing, which it has. But has it come to a visual level? Point of control, afternoon pullback high. What about the value area special situation play? Did we have any 30-minute bars close inside of it? One. Is that marking acceptance, Fred? I don't know. But we'll see by the end of the day. And thank you very much for the question, Mr. Decker. All right, Damien. After noticing some of your best traders are trading crude, Emmanuel, Dylan, Alejandra, Samuel, after last week's interview with Dylan, I was inspired to trade it exclusively for a few days using a 4-range chart. And wow, what a difference. As others have said, NQ's manic movements are like crack, which is why it's so addictive. But just comparing the typical NQ, ES, and CL chart, CL is so much smoother with candles staying within a small range. Well, I guess that kind of depends on the time frame and what you define a small range as. But his question continues. If the goal is for traders to get funded and make some money, why do you spend so much time trading the most difficult thing there is? May I suggest more focus on CL? Damien. Well, Damien, thank you very much for the question and for the thoughts here. Michael trades the NASDAQ, I think, because it's really the most popular product that traders do trade here at Topstep. I can't trade it. I'm with you. It's too busy and gives me heart palpitations. I've been a trader in the S&Ps for over 30 years, so I tend to think that I know it better, but what do we actually know? We don't really know anything. So, and I know that, Dan likes to trade crude oil. There are times in the past where I have, found opportunities in crude oil or in gold. But I think we're just kind of following suit with the most popular products. And I have no problem focusing more on crude. Eddie has been a lot more focused on gold, and I think that there's definitely some good opportunity in both of them. And with the tool that you're using, the 4 range chart, that's something that I don't look at. Maybe I should, but I'm kind of looking for longer time frame opportunities. But I appreciate the thoughts. I appreciate the question, and we will keep that in our hip pocket here and take a look at maybe some more opportunities in the crude oil market. Be interested to see how you're trading, Damian, on that 4 range chart. Eddie, our good friend Eddie, is the one that has been really kind of focusing more on the gold market, and Hoop's saying he likes the range chart. Helped a ton in shorter time period. Yes. All right, I do have one more question here.
Before you do, Hoag.
Yes.
You mind if I just real quick?
Yeah, go ahead.
Yeah. Okay. Hey, everybody. I matched all those numbers. It was fun. But here are your winners. I guess it doesn't really matter if you see it right now because I'll be emailing you. Here they are. Congratulations to Walt H., Bunny, Nuff Said, Happy Go Lucky, Gear, Stock Psyop, Tim C. Weiss 20. Good stuff, everybody. 50K trading combine for you all. So I won't take too much of your time, Hoag.
Thank you.
Get back doing the good work.
Good job. Thank you very much, and congrats to all of you. All right. So Manu is sent in an email here. Thank you very much. We're glad you're with us, Manu. So his question is about Michael and how he likes to kind of create a cushion early in the session. So I know Michael. We go way back. I've been kind of his trading buddy or coach or whatever for quite a while now. And there are things that he does that I agree with, and there are things that he does, of course, that I disagree with. I get it. How Michael uses the cushion is to get himself a little bit of profit so that he's not looking at negative numbers right away, right? He wants to just kind of build up a little bit of a profit cushion throughout the morning or early in the session, so that I think it's a confidence thing, and he's not wrong about this. If you're seeing the market well and you can stack up a couple of nice little winners, of course that's going to make you feel better. And then I think it's his idea that's telling him that he's seeing the market well. He's got a little bit of profit. Then he thinks, well, maybe I can trade a little bit bigger then. And a lot of days that has paid off very well for him. He'll trade a little bit bigger, take a couple of more trades, rack up a nice trading day and call it a session. But if things don't go well and he doesn't get that cushion, believe me, like everybody, we all have a tendency to get mad and to start chasing money and all that. But when we're on, TopstepTV and we're working together, I can kind of try and keep him from doing that. And, today he was down about $500. He took a trade while we were talking about something else, made his money back, and just said, okay, I'm a little bit positive on the day. It didn't go well. I wasn't able to put together the cushion. So I'm going to just kind of call it a day. And hopefully he does. I mean, I'm not watching him throughout the entire trading day. But I get it. It's a comfort thing. He feels better when he's got a little bit of a cushion behind him. And, there's nothing wrong with that. There's nothing right or wrong really with anything as long as you're not, losing and changing your lifestyle because of those losses, right? Nobody wants that, of course. But, so you continue here, Manu, and you say started the day strong at a 50K combine with $400 profit. And I continued trading to a $280 loss. And now I'm at 244. I'm sure I didn't use the cushion correctly. So I don't think that there's a right or wrong way, really, Manu, to kind of have a cushion. I'm from the school of thought that you're taking a trade because you have a probability that the trade is going to be profitable, hopefully for more than you risk on the trade. Michael likes to have 1-to-1 and he just likes to be right a lot. Sometimes that's an issue. When you are right a lot, it's fine. It's great. No problem. I'm not a fan of static stops. I think stops have to be placed according to market generated information. If I'm going to take a long and I'm looking at 15 ticks of risk, I'm going to want to look at that and say, okay, if this trade goes my way, is it reasonable and probable that I can realize a 30 tick profit on this trade? And if it's not, if I can't see that, then I'm probably not going to take the trade. But it doesn't have anything to do with any trade that happened before or any trade that happened after. But that's the way I look at things. Other people look at things differently, and it doesn't make them right or wrong. It's whatever works for them. Okay, so the idea that you were up $400 today, was that not enough? Did you see an opportunity that was part of your strategy, that was part of your journey, that said, yeah, I got to take this trade? The trade that you took, or trades that you took that lost the $400, don't have anything to do with the fact that you were up $400. I'm glad that you finished this series of trades positive, but as far as using the cushion correctly, I don't see that there's anything wrong with what you did. You were up $400. If you were up $1,000 and you lost $1,000 and you were down $280 and then ended up 244, I would say you misused that cushion. So once you get to a certain level, and again, Manu, I don't know you, I don't know your time frames, your risk appetite, anything like that. But once you get to a certain profit level throughout the day, you want to guarantee to yourself that you're going to end the day a plus player. You're going to end the day positive. If it's $800, risk 50% of that, you're risking $400. If it's $1,000, you're up and you're going to risk 50% of it, you can lose 500 of that, but you're going to end the day up $500. It sounds great. It's not as easy to do as it says, because you were up $1,000 and you gave away $500. That is going to be a bitter pill to swallow, and to be able to walk away up $500 after something like that takes discipline and willpower. I mean, especially the first time you do it. But when you start seeing your account balance continue to ratchet higher and higher by doing this, it's going to get easier and easier and easier for you to step away in that regard. There was somebody, Sean was up $7,000. He's like, do I stop? What do I do? And there were a number of different thoughts. Michael was just like, stop. ICT was like, stop, go do something else. And, Eddie was like, well, what about risking a certain percentage of it? Eddie was risking 40% of it. He says, you lose $2,000, then you're done. You're still up $5,000. You still had the opportunity to try and add to those profits. And, and I think that's the proper way to manage a cushion, right? So, Manu, next time you're up $400, it should give you a little bit of confidence moving into your next trade, even though that has nothing to do with the next trade. So, you've got to kind of look at your history in trading. What's your best trading day? And that was what I asked Sean. Well, I would have asked Sean, if that's your best day ever, you walk away with it. Anytime you put up a new all-time best day, wahoo, good for you. But if you want to continue trading, you can choose a scaling slide as to the percentage of profits you're going to risk. Case in point, you're up 1,000, you risk 500. That's 50%. You're up 2,000, you risk 40%. You're up 3,000, you risk 30%. You're up 4,000, you risk 20%. You're keeping a bigger percentage of the profits the bigger the profits are. And you're still giving yourself enough risk to continue to trade. Or you get to that best trade ever, you're up $7,000. You buy you can take one more trade. If it's a winning trade, that buys you the next winning trade. If that's a winning trade, it buys you another winning trade. That's a winning trade, that buys you another winning trade. The next one's a loss, you're done for the day. But it's not easy. It's never easy. Karen, nice. We want a combine. Very nice. So Dante, you're asking me to repeat the scaling plan with the scaling sliding profit plan, right? Manu, my pleasure. I hope that it helps. So Dante, if you can set kind of a sliding high water mark, right? Like you're up $1,000, you can risk 50% of it. So you're up $1,000, you lose 500, you walk away. You're still walking away up $5,000. But let's say you're up $2,000 one day, and you can set this as a part of your plan. You're going to risk 40% of it. You're risking a smaller percent of the profit, but more actual money. But you're going to be you lose 800 of that. You're going to call it a day. You're up $3,000. Maybe you risk 30% of it. Okay, we're still losing about $1,000, but now we're up $2,000 at the end of the day. Up $4,000. Maybe you risk 25% of it. You risk 1,000 of that. Or again, if you're at your best day ever and you're still seeing things and you want to trade, give yourself, one more trade by having a winning trade. Every winning trade buys you the next trade. First losing trade, you're out. Okay? All right. So I appreciate everybody. Thank you all for joining me today. Thanks for emailing in the questions. You can always email in questions to groupcoaching@topstep.com. We always look forward to, having sometimes, if we have time, being able to kind of prepare for them. I didn't necessarily have that time today, but we do our best. And always a pleasure to be with everyone. Just kind of going here. Yes, Fred, thank you for the questions. Dan, as always, thank you for your contributions. Sarah Hall, always such a kind person. Hoop, good to see you. Andy, this is a lot of fun, and I really appreciate everybody being here. So I always like to end it with, hey, hang on a second. What did I do?
I always like to end it with your desktop screen.
Yeah, right. Here it is. There it is. And always with a dad wisdom. My dad was a trader on the floor of the Board of Trade for 40 years. And he always had good wisdoms. And, anybody can make money on any given day. Just push the right button. So it's easy to make money, and it's very easy to lose money. The most difficult part is keeping it. It's very difficult to keep. So we're just in the theme of what we just talked about. You're making money. You're up good on the day. If you want to continue to trade, don't give it all away. Give yourself a certain percentage of a daily profit to continue to try and add to it. But if you lose that amount, you have to walk away. Blessings to everyone. Thank you for joining us here. Jack, thank you for everything you do. JD, everybody involved in Topstep TV. There's a whole bunch of people working on this, and want to make sure and recognize all of them. And it's a pleasure to be here with everybody today. And we look forward to seeing you again tomorrow.